over the 7-year time horizon, beat virtually every other alternative asset by 2 to 4 time return, then I wouldn't be too thrilled with that level of volatility. But it is a cost, a price you have to pay for a massively outperforming asset. To put it another way, simple math, Bitcoin or any other asset cannot continue to accrue on a compounded basis at 60, 70, 90, 500% a year in perpetuity. It will be larger than the global economy in a very short period of time. So if you're going to take the big ups, you're going to be ready for the periodic big downs. Time horizon.
We didn't have AI back then, right? So people can argue that the reason why, crypto or Bitcoin outperforming everything else is because that was the cool kid. So everybody wants to, be friends with the cool kid. Now we have a new kid that is cool. What happens now? It'd be
disingenuous of me to claim that crypto is special. Any market, if it pulls users away from that market, whether it's tech stocks or anything else, liquidity will suffer. Generally, when liquidity suffers, you have a lower marginal unit of buy-sell demand, and then that is more prone to rapid price escalation. We always talk about the price going down at a rapid pace, but Bitcoin also has the potential for price escalation. So there's no question that things like prediction markets, AI stocks have pulled attention away from the growthy speculative side of crypto. I do think overall, though, the pie of interest in investors is special. So as we talked before, you may be decreasing your marginal user, but you're increasing the overall pie you have to choose from. Scales increasing. So I'm not worried. There's a steady growth in breadth and entry of new crypto participants. It may not be growing as fast as some people want, but again, I saw contracts recreated at the New York Mercantile Exchange take 10 years to get hold. So this is super fast from my perspective. AI stocks have volatility. The advice they had to anyone looking to get capital from institutions like that have done the work on crypto is don't be embarrassed, maintain consistency and clarity of communication. We are big boys. We appreciate this has volatility, and we're looking to buy at the dips for high quality investments. So that was extremely encouraging.
Do you hear any concerns they may have?
Look, again, I don't want to be disingenuous. Of course, whenever you go through a volatility experience like this in any asset, people are going to go back and look at their numbers, look at their research, and make sure they didn't make any mistakes.
Yeah.
But what I can say is this, Bonnie. I don't know of a single major institutional investor anywhere in the world who has done the work on this asset over the last, studied it over a 5-year period, and now have close to a 10-year track record. We are big boys. Who is shocked and appalled that this asset has the ability for a mean reversion on a periodic basis. So that was extremely. That's the case. You probably haven't done your homework on this asset or any other similar asset. So none of them are surprised. No one's happy. I'm not going to suggest that people are happy about this, but no one's surprised, and it doesn't dissuade everyone. As I've said if you've watched one of my interviews, I'll repeat something I've said often. If you like apples and you go to the store and apples are 50% off, don't suddenly dislike apples. Now you may not buy 1,000 apples, but you'll buy the amount of apples and maybe a few more that you normally buy with your family. So it comes down to how much work have you done on the asset, how comfortable you are with the historical risk profile, and why would you be surprised that an asset that's behaved for the last 10 years in a certain way does exactly the thing it's done? No one's surprised.
I've heard this point of view that an expert raised. Basically, from experience, she said that in the past, nobody really asked about quantum risk, but nowadays, institutional investors are asking more and more about this topic, and it's about single digits still, but people are asking about it. How would you, maybe put people at ease?
I think when you're talking about a technology everyone acknowledges, and I have the luxury, so I'm not a quantum expert. I have the luxury of being a fellow at MIT's largest artificial intelligence lab, so I get to be around the people and who really know what's going on at deep research level. And I'm constantly pinging them when new information hits me about where we are on the quantum life cycle. And so I don't want to be dismissive of what appears to be a medium to long-term issue that, by the way, not just crypto, but every human has to worry about, right? Our nuclear codes are a lot more important than our Bitcoin ledgers. So that is something society will have to deal with over time. I am fairly confident from the research I am being explained by the people I trust that we are far enough away for that to be a significantly longer-term potential risk that I don't think explains price movement today. I don't think it's reasonable to argue that a 10, 15, 20, 30, or even 40-year actualized risk where we haven't hit, we're assuming that innovation will occur, which is a safe assumption. Humans are incredibly innovative species. So we're assuming innovations will occur over the next 20, 30 years that will cause that risk to actualize. Those things haven't happened yet. When and if they do happen, and we see a clear path to not just realization of full quantum, but to commercially accessible full quantum, then I think that's a valid argument to have. Right now, I think that's more, people are scared of volatility. And when you're scared of volatility, you go into risk mode, you go into fear mode. And this is something that is worthy of discussion, but not really, I think, affecting price movement in the short term.
I guess, when there's big price movements, people want to know why, and they go find different reasons to prove their point, right? Yeah.
It's just like when it's a bull market, we're looking at every reason for it to go to 5 million, right? That's human nature. I get it. I saw it in crude oil. I used to go on CNBC and shows when I was back at NYMEX, and every time crude oil was rallying, it was going to go to 1,000, and the world was going to end, and then the next week, volatility, you go into risk mode, you go into fear mode, and then the next week it's all going to go to zero because we're awash in this trading. This will be a characteristic of almost every market that we trade.
Speaking of AI, again, from your interviews, you talk about every human interaction in the future will have a financial layer. For example, self-driving cars. Who gets to cut the line?
I agree. Look, it's an elegant, efficient mechanism to settle disputes and to determine relative value. So I'll get on my soapbox here. So when you look at an exchange, everyone thinks that exchanges trade value with each other. They actually don't. They trade risk. That's what we're doing. If you trade with me, we're transferring risk. You're selling something to me, you're removing risk from your portfolio, I'm buying it, I'm taking on risk.
Wow.
So think about our daily lives. Think about how many moments a day we have to push risk on to someone else or agree to take risk on from someone else. Those are financial markets are really elegant, simple ways to price that risk without fighting, without argument, without arguing, without elongated negotiation. And so there's so many wonderful ways we can simplify our lives by applying financial components. And the problem is we don't have the time in our day to do those micro negotiations, and we don't have a banking system that's efficient enough to settle those microtransactions all the time. Now we do. Now we have agents that we can program to act on our behalf, and we have cryptocurrency custody and settlement layers like the one that Coinbase launched that allow for cheap, quick, efficient micropayment transactions.
You guys launched already?
We did. Explorer 2. Yeah.
Oh, would you explain, elaborate that?
Agentic. It's a agentic payments protocol.
Okay.
Now that's important because we can do it already. I have CloudBot on my computer at home. I'm experimenting with allowing it to make certain microtransactions on my behalf. But try to open up a bank account through your CloudBot, right? That's going to be extremely, extremely challenging.
Right.
You have to rebuild financial payment layers from the ground up. We have USDC, we have custody, we have payment rails, and Explorer 2 allows for the efficient transmission of agentic payments across all of those components.
I like to visualize the possibility. So the self-driving car example, and what else is possible in the future with this?
That's a great question, Bonnie. So look, we have let's stick with cars for example.
Okay.
A parking space.
Yeah.
I'm going to leave a parking space. Maybe I'm motivated to finish. I get a bid on my phone saying if you leave your parking space 30 minutes earlier, we'll pay you an extra $5. Wonderful. That's a market mechanism to solve a real problem facing people. We can set off auctions for. I'm a parent, so I want. if you get an investment portfolio through either capital gains or passive yields that targets anywhere from 9 to 14%, you're doubling your wealth every 4 to 6 years, right? On a compounded basis, right? So 4 to 6 years, over 30 years, you're looking at 5 to 7 compounding periods, right? If you can compound your wealth 5 to 7 times, you can build extraordinary wealth if you're dedicated and consistent. The issue is hitting that capital appreciation number.
Yep.
And so the argument would not be to sell everything and buy Bitcoin. I'm certainly not saying that. But we know from the data that risk assets like capital gains or passive yields that targets anywhere from 9 to 14%, you're doubling your wealth every 4 to 6 years. Upside volatility on a compounded basis. You want to maximize your sharp, but you really want to maximize your Sortino ratio, because that talks about the upside volatility. You need assets in your portfolio that beat inflation at that 9 to 14%. The issue is believe inflation is going to be 3 to 6% a year. You're now talking about having to hit a 15 to 20% return. Sell everything and buy Bitcoin. Double your money every 4 to 6 years to build real wealth. So I would say know your age, know your risk profile, understand your inflation rate where you are, and understand your bogey to beat that has to be anywhere from 9 to 14%. If you want to double your wealth in 4 to 6 years, and choose your portfolio.
You know what else I would add? Listen to John Moore. Watch his interviews. He's so great. Thank you for being here. Watch John on Vine Blockchain. I hope to have you back in the future.
I hope we'll have you.
Thank you. Thank you for being here. Thank you for spending the time.
Have a wonderful day. So I would say know your age, know your risk profile.
Potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news for the loose market right to your phone. Tap your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bold. Consensus Miami is where crypto, culture, and trillions of capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there.
Get the breaking news for the
Experience
loose
that
market
percentage.
right to your phone. Tap your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
Joined by Michael Ashby right now, and I think you're the perfect person to talk about recent Bitcoin price actions. What do you think about the general sentiment, and what are some observations you can share with us?
Awesome, very happy to be here. Thank you. Happy New Year.
Happy New Year.
So I think we've seen a lot of market changes in the last 6 months. Particularly market structure has adapted quite significantly. So what happened in 1010 really did jolt a lot of funds, and I think we've seen a new normal for the market. And so a lot of the strategies that were being enacted by traditional trading firms have changed. And so I think that's been part of this. And you couple it with the macro sentiment. Most recently we've seen Bitcoin come off aggressively, and there's a lot of speculation why that happened. It looks as though it's actually through traditional finance products. Now, if you look a year ago, we would have never dreamt that traditional finance products would influence Bitcoin. But if you want to take a positive out of this, is that we've now got to a place where we have the likes of BlackRock and all these other large institutions that are in our ecosystem and are influencing it. So I think naturally the market now understands what happened, and it's going to be more robust. I think having these folks with us is actually a good thing. And so I think we see the market evolving and becoming more institutional, and just this is part of the growing pains as we go.
You are leading Algo Quant,
Right, yes.
and a lot of people are arguing the reason why quant firms have been doing so well is because crypto market was. I'm not sure if it's still inefficient, right? What are you seeing now? Has anything changed after the Bitcoin spot ETF entered the game? What are some, interesting insights you can share with us?
Yeah, that's a good question. So we definitely are seeing more institutional participation, and with that becomes less inefficiencies. So it's natural for a market as it evolves and goes up to condense these inefficiencies. And so if you look back 2 or 3 years ago, we had the basis trade. It was very easy to put on. You were looking at sort of 20-30% unlevered. Today, that no longer exists. So what you're having to do is actually be a bit more sophisticated. We do see decentralized finance as being a new place. So again, in the last 12 months, we simply are seeing more institutional we've seen the growth of hyper. There was very little liquidity. We've now seen a huge amount of liquidity, and even in the last 2 months, we've seen a lot of traditional metals be traded on decentralized finance. That would have never happened before, right? And so, again, I think if you're able and willing to be dynamic and grow with the industry, you're able to take advantage of this. So you can't be just focused on trading traditional centralized exchanges. You have to adapt as the ecosystem adapts.
As a quant trader, do you care about what you're trading at all, or do you just look at the numbers?
Yeah, so another good question. So I care about liquidity.
Okay.
And I want to be able to get in and out without getting stuck. And so the underlying asset, as long as it is liquid and on venues that I think are safe, we're happy. So it's much more about, are we comfortable with the credit risk of that venue we're trading on? And then within that token or product, can we get in and out of it easily? That's becoming much more difficult. On the one side, the credit worthiness of the exchanges are getting better. DeFi exchanges are still new, so it's I guess new for everybody to get comfortable with it, but the centralized exchanges are getting much better. The products themselves, the liquidity has become quite low in a lot of altcoins. So you're seeing a lot of wash trading happening. And although if you look at the actual headline numbers, it looks okay. What we've seen post 1010 is a lot of the market makers have exited, especially the mid to lower altcoins. And so there's not the depth anymore. So it forces us to do more in the top 100 tokens, if you will.
See, I think a lot of people are interested in your everyday work. What do you do every single day? But I think I want to ask you this. So I want to learn from the best traders I can find, and that is you. What can I learn from quant trading? Like when I invest in something, do I need a stop loss every single time? Or is there anything I can take away from, your trading logic?
Yep, so I'm happy to. So I guess, again, this is not advice, but if you're looking at crypto, the volatility in crypto is quite high. So running trailing stop losses can be quite dangerous if you're going to get pushed out. So the trick, I think, with any trading is to diversify and to ensure that you're not overly focused on one or two things. And so if you look at our portfolio, we don't hold assets more than 1 day. Excuse me, we're constantly moving in and out of these assets. And what we like to do is we like to have expectations of where we want these tokens to trade. And so let's say if something is trading down more than 10%, we get alerts, we'll look at it, understand what's going on, and then we'll come in and out. So what it actually suggests is that you have sort of, I guess, wider stop losses, but you have alerts as things are moving away from you. And so you're aware of it, you're focused on it, you know what's going on. If the stop losses are too tight, you could get taken out right before it comes back up again.
Exactly. We saw that in silver just a couple days ago, right? And it kind of bounced back. And that event inspired me to ask you this question because I was panicking for a while.
Yeah, it's like what's saw, right? You're the car crash.
Yeah. I want to ask you about tokenization. It is a very big word that has been, talked about, but let me tell you this. When I go to a restaurant, I care about if the food is good, if, the restaurant is cheap, and if I'm treating people, if I look good, right? But when institutions talk about tokenization, they're using a lot of big words that retail retail investors or everyday people don't understand. Using the same logic, what would tokenization represent in this same scenario?
So I guess right now, if you want to use Apple stock, right? You want to buy a shared Apple because you like the iPhone. You have to do it through a broker on the U.S. exchange. So the idea of tokenization is that you'll be able to get exposure to that same share of Apple, but in a derivative form. So it's basically the same Apple share, but you can do it in a tokenized aspect. And so if the Apple shares go up $1, your token value goes $1.
Right.
So it pairs the same. And the idea here is that right now you have to trade it on the U.S. exchange. As you tokenize it, you can trade it in Hong Kong, or you can trade it in China, you can trade it in. You have to do it through a broker on the U.S. exchange. So the idea of tokenization is that you'll be able to get exposure to that same share of Australia and always create in a derivative form. So it's basically the same Apple share, but you can do it in a tokenized aspect. And so if the Apple shares go up $1, your token value goes $1. So it pairs the same. And the idea here is that right now you have to trade it on the U.S. exchange. As you tokenize it, you can trade it in Hong Kong, or you can trade it in China, you can trade it in. You have to do it through a broker on the U.S. exchange. So the idea of tokenization is that you'll be able to get exposure to that same share of Australia and always create in a derivative form. So it's basically the same Apple share, but you can do it in a tokenized aspect. And so if the Apple shares go up $1, your token value goes $1. So it pairs the same. And the idea here is that right now you have to trade it on the U.S. exchange. As you tokenize it, you can trade it in Hong Kong, or you can trade it in China, you can trade it in Australia and always create in a derivative form. So it's basically the same Apple share, but you can do it in a tokenized aspect. And so if the Apple shares areas that we can understand and we can model, and try to ignore the bits that we don't, because it's just there's no point in trying to guess, if you will.
To understand your point better, an example you just gave is using AI to trade, but there's a bug or a glitch. Would you consider that uncertainty or risk? Because we know it might happen.
Yes, so I see it as a risk because we know it's going to happen, and so we can essentially run this in a laboratory, and we can model for it, we can test it, we can run a series on it, and then once we get comfortable that there's a manageable level of risk, we can deploy it. The bit that we don't know is what happens if AI starts to go crazy. Like, we don't know why, but I'm not an AI expert by any means, but I think we're conversational, if you will, and I think the speed of the technology advances in AI, it's very hard to know what's going on. And so I think there's far smarter people in the space I think could be able to model, and we engage with them to help us understand the risks.
What about, risk like tariffs? It might happen, but people don't know when and how or why. How do people navigate this for everyday investors? We see the headlines and news talking about, the world is heading towards this uncertainty and, this very vague era. How do we adjust our trades or our investment strategy?
Yeah. So again, from a quantitative perspective, we're very data-driven. So we look at data and we see what you described as a world with higher volatility. Now, in actuality, crypto volatility is dampened. So for the last year, the amount of volatility in crypto has reduced substantially. And the reason for that is ETFs. We have less players. A lot of people started trading digital asset treasuries. So some of the faster money exited. So it's counterintuitive that in a world with, I guess, more risk, macro risk, the volatility has actually compressed. But what I'd say for your retail investors is that if you find things that you actually like, research them, get comfortable with them, and then think in your mind's eye that the market could move 10 or 20%. But if you truly like that, you should be invested on that basis. And you should just always double click on your thesis and make sure that nothing changes. But expect in this world with the personalities we have leading it at the moment, that there is going to be some volatility, and just be comfortable to weather that storm if you want to invest in the space.
If you had to teach a class that's called Investment 101, what is the main takeaway you want people to learn from?
So again, I like to read a lot. So I would ask people to spend time reading about the part of the market that you're interested in, and learn from the past. And so there's a great book called Remnants of a Stock Operator, which is one of the more famous books. And it was on the advent of the US stock exchange where it first developed hundreds of years ago. If you read that book, nothing's really changed. In hundreds of years, nothing's changed. But you can study what people do and you can learn from them. Nothing's new. Like, everything rhymes. But I encourage you to get very close, and you can do this via the social media platforms. You can follow people. You can do it through studying. But from my own journey, I've tried to read as much as I can and learn from other people's mistakes and how they were successes, and then try to adapt my model. So it gives you a leg up, as it were.
What are some mistakes you would absolutely try to avoid now?
So for me, in my seat as CEO of AlgoQuant, it's trying to do too much. I have a great team around me, and it's trying to empower them and really let them run the business and be there as a coach and a control function. I think we also are doing our best to be as dynamic as possible. Crypto is changing so quickly, AI is changing so quickly, that the people that don't have the ability to be dynamic are going to really struggle. And so, our strategic goal is to be as dynamic as possible, and as the world changes every 3 months, we're able to go with it. And the last thing I'd say is that, and this goes for trading on the retail front as well, you should never chase anything. As soon as you start chasing something, it never works.
Oh, elaborate on that.
So if you think of it, like if a stock starts going away from you, and you're trying to catch up, and you never get there, and you can't get the price, it probably means you're too late. It's better to understand it, be patient, let it come back to you. Inevitably it will. And if the stock comes back to where you're comfortable, don't buy outside of your comfort, right? And so for us at AlgoQuant, we don't make stock predictions, but we like to invest in different areas. So rather than trying to race into it, we build strategically, and when we're ready, we go into it. And we find that that's the way to success. But it's the same thing for trading.
When you see people start talking about the same thing on Reddit, is it too late already?
It's not too late, but you shouldn't rush into it.
Okay.
And so what I'm saying is that you should take a deep breath, say, okay, I found something really neat. Let's now read about it. Let's read the people that like it, the people that don't like it. Let's understand it. Let's spend a couple of weeks really getting to know it and understand what the risks are versus just chasing it. Everybody likes this, I'm going to buy it, right? It's better to really understand it. Understand what you're doing and how long the momentum will go, how long the risk is going to be there. And then you're an informed investor. And so, again, we run a business, and so for us, it's not chasing the latest perpetual markets. We want to understand the perpetual markets. Once we understand it, then we'll start to act on it.
By the time you understand it, it's already the top. I think that's the lesson.
Potentially, but these things always go up, they go down, they go up again, right?
So be patient.
Exactly. So maybe you get the second one.
Right.
But at least you're not going to get hurt as badly as you potentially could.
What are some narratives you are paying attention to?
So right now, you hit two of them, tokenization AI. I think the other thing that we're paying attention to a lot right now is how the market is evolving just with institutions coming in and with the altcoin sort of, I think alts are trying to find a new normal. I think where they were before is not their future. And I think the venture space is also evolving. And so for us, it's okay, what world is alts now, and how are they going to work with the DEXs and the CFI? And is there going to become, an alt season? What's going to be the catalyst for that?
Does that apply to retail investors as well?
100%. So I guess like we've seen altcoins sort of go down flat, right? So what is the next narrative to help create an alt season?
What is it?
I don't know, but that's what we're looking for. So if you find out, please tell me. In all seriousness, I think the Clarity Act in the U.S., if it gets passed, I think will be a very positive for alts. And I think more macro, if we see sort of the macro stabilize, that could also be very positive.
So from how I'm understanding this, you don't think, what people say, altcoin is dead, you don't think that's true?
No, I think there's a lot of, again, in my mind, the pendulum always swings from one side to the other, and it's going to come back, right? Right now, there's a lot of bearish sentiment, and rightfully so, because it's been quite subdued. But this industry is built on these altcoins, and they will come back at some point. It's probably not going to be the same. It's going to be different. But there's a lot of capital there. There's a lot of really smart people. And I think we're interested to see how that develops and evolves.
Before I let you go, I just want to say after talking to you, I feel like I'm a better investor now. Thank you so much, Michael, for this conversation, and I hope to get you back soon.
Okay, thank you. Pleasure.
Thank you.
Okay, thank you. Get in there. Come on. Come on. Let's get a good hit. Whoa. Okay. Come on. It's like they're dating. I mean, come on. Let's hurt somebody. Okay. Oh, thank you.
Come on, guy.
10 seconds.
Go, Red.
8 seconds in this round. 5, 4, 3, 2, 1. Oh. All right. Woo.
Oh, all right, this is interesting.
All right. Can I get this guy's attention for a second?
Yes, sir.
So, Jeff, tell me about your technique out there and what your training routine was like to, we got 40 seconds here. Well, tell me.
Yeah, so I think what my robot and I failed to realize is the goal is to actually look toward your opponent and punch them.
Okay.
We spent a little too much time, if Yat was here, a little too much time punching over here.
Okay.
So some advanced fighting techniques I learned is you should actually try and hit your opponent. So we're going to focus more on that strategy in the second round.
Hitting the opponent. That's the name of the game.
Hit the opponent.
Hitting the opponent.
Yeah. That's my pro tip I just received.
So any training that you've had has not come into play yet.
I mean, I've spent about 40, 60 hours a week working on this. I'm a little disappointed that it didn't translate yet.
Okay.
But I'm really going to work on that for round 2.
We got 2 more rounds. 2 seconds. Let's go. Okay. Come on, crowd.
Let's go, Red.
Come on, crowd. We need you. See if I can walk around here. All right. Round 2.
Yep.
Come on, Yat. Give him hell. Let's see the energy of this.
Oh, right direction.
Whoa. Get in there. Whoa. What was that?
Oh.
This is UFC. Whoa. Balance. Come on, baby.
All right.
Let's see something.
Oh.
Whoa.
Yeah. Low blow.
Oh, the crowd liked that one. Come on. Turn around.
Okay,
Come on.
okay,
Give it to him. This is, I'm not sure what technique.
There he is.
Okay.
All right, let's
Come
go.
on.
Go.
Oh. Swing and a miss. These robots are getting tired of shadow boxing. I mean,
It's my patented spin move.
Let's get some contact. Come on. Whoa. Hey now. Woo. Oh, yeah, there you go.
Oh,
Come on.
Get in there, Red.
There you go.
Wrong way, Red.
Oh, okay. All right.
Turn around. Jeff, have you ever done this before? This is amateur hour.
Wow, this is harder than
It's harder to looks, folks.
Whoa, good punch, Yat. Good punch. All right, we have. Whoa!
Oh, come on. Low blow. Hey.
Oh, yes.
Oh, I think we have a broken rib. 30 seconds to go in the round.
Oh.
Whoa, big one.
This is like
Stay in there.
Let's go.
Come on, charge.
Come on, Red.
Oh, big one.
Oh.
All right.
Woo.
There it is. That's
Come
robot
on.
boxing.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Oh.
Woo. Oh,
Okay.
man, that round finished with a flurry of punches.
Woo!
That was crazy. All right, yeah, tell me about your strategy here today. What are you trying to achieve?
It's called Brawl.
Brawl.
Robot Brawl.
Okay.
That's it.
Okay.
Button mashing. This is like
you learned this from childhood street fighting, right?
This is like a Nintendo Wii. It's just a bit of a lag time, so I gotta anticipate. But
Okay.
it's pretty cool. It's real steel with more friendlier. But yes.
The winner gets to take the robot home. So I just
okay.
made that up. I have no idea. These
Yeah.
things might be $1 million.
I'm just trying to figure out what are the combos here.
Okay.
I need the fireball.
Okay.
Waiting for my Hadouken, but yeah, trying to figure that out.
You're doing great. I also just learned your robot's name is Sam.
Yeah.
So come
Okay.
on, Sam. Let's.
Yeah.
They're getting recharged. We have 10 seconds until the third round. And as the judge, I will tell you that the first round went to Wilzer. The second round went to Yacht. So this is the tie-breaking round.
Okay.
We're going to see who wins. Let's get some enthusiasm. Let's ring the bell. Round 3. This is it. Come on. Oh, good one. Yeah, get in there. Let me get out of your way here. Whew. Let's land. Good punch. I like that.
Whoa.
I like that. This is like, Tyson Holyfield 2. We're going to get an ear biting in here?
Ooh.
All part of my
Big
plan.
punch.
All part of the plan.
I mean, Jeff is losing points for making no effort. All right, come on.
Oh, I heard that, David.
Oh! Whoa! Oh, my God!
Low blow.
Whoa! Ladies and gentlemen,
Cut me,
we
Mick.
have a KO! We have a winner! Yeah! The champion of Consensus.
There we go.
Boxing.
Whoa.
He did not count the 10.
I didn't mean it, buddy. I didn't mean it.
Put that trophy away. We didn't count to 10. It's anyone's fight.
Oh, my God. Let's get our body going.
All right, let's go.
Come on, Red.
This is like the remake of the
rest
Karate
is
Kid.
just for charity. We already have a winner. Let's land some punches. Let's land some punches. Let's hurt something. Come on. Let's hurt something. Let's, There you go. Oh, that's the best punch of the day. Good one.
Oh, it's getting real.
We've got to thank
All right. That's a.
Yes. Take the trophy. This is
thank you.
Amazing.
Such a good game. Such a good game.
Well done, everybody.
Right, here we go. Yay.
Let's get a photo.
Thank you all for attending the very first robot match of Consensus
That was
Hong Kong.
That was a lot of fun.
I think we have 2 dead robots.
Ladies and gentlemen.
He's back to life.
Yeah, speech?
Whoa. Yes, any comments on the victory today? All the training paid off?
It felt robotic, yes.
Okay.
Very nice.
Okay.
But this is a lot of fun.
Were you just feeding off the crowd?
I was at the end. I was feeding off the crowd. Thank you so much for your support. Yay!
Yes, everybody. Let's hear it for the world champion of iRobot Boxing.
And
Robot Boxing. Sorry.
I know that Justin was supposed to be here, right?
Yes.
I had dinner with him last night. He didn't show up because he knew where the champion was.
The intimidation factor.
That's right. Congratulations,
Hey,
Scott.
thank you.
Very
Thank you so much.
Thank you
Thank you.
very much.
Thank you.
And Jeff, your consolation prize is in the mail.
Thank you, David. Thank you, everyone. And thank you, Brad. Up next, do not leave. We have the company that brought you these robots. We have a fireside chat to dive into the future of robots. What will that look like, and why is it closer than you think? We'll dive into, this was an incredible demonstration. There obviously are a few challenges that still remain before robots become fully mainstream. What are those? Where is it going in the near, short term, and long term? Do not go away. We'll dive deep into that. I will not be wearing a robe, so you can take me a smidge more seriously. So see you in 2 minutes once we clear up the stage. Thank you. Oh, yeah, thank you. No, that's a lot.
You're seeing the rise of dominant DATs, and these DATs are arguably better than having exposure to the layer 1 itself. The 2 dominant DATs so far are MicroStrategy and BitMine. You can see by far we're the 2 largest holders of cryptocurrencies. BitMine around 4.4 million ETH. These 2 DATs are now 90% of the trading volume of all crypto DATs. So again, dominant. And you can see here, BitMine is 5 times larger than the next largest DAT for Ethereum, and it trades 14 times more trading volume. And trading volume is really the lifeblood of a DAT because that's how we access the capital markets. And if you're skeptical if you can make more money owning a DAT than the underlying layer 1, look at the performance. BitMine was essentially created on June 30th. The stock was $4.50. From June 30th to December 31, Ethereum was up 22%. But look at BitMine, it rose 500%, meaning it outperformed Ethereum by 48,000 basis points. And look at 2026. Ethereum, of course, really took a punch in the gut this year. It's down 32%, but BitMine is down 21%, so it's outperforming by 1,100 basis points. So the reality is that a properly structured DAT is going to provide you outperformance versus the layer 1. And I'll explain why. There are 4 pillars of growth for BitMine, okay? And again, once you hear this, you'll realize the best days for BitMine are ahead. The 4 pillars are we're going to maximize yield on the treasury. We're going to invest in moonshots. We're productizing BitMine. And we're playing a role in bridging TradFi and DeFi. And all of these are important roles of us as a DAT. So how do we optimize staking? Well, maximize yields. We're going to optimize our staking yield. We have alpha strategies because we have Tom DeMark and Mosaics as our advisors. We're optimizing our yield on the cash, and we're doing accretive capital market transactions, which, of course, in the future could include M&A. By the way, we also have no leverage. BitMine is debt-free. We've staked roughly 2/3 of our ETH, and that's generating $200 million a year in rewards. When we're fully staked, it's around $300 million a year. That's about $1 million a day. And if Ethereum gets to 12,000, which I think is reasonable in the next 12 months, then our staking rewards would jump to $2.4 billion. Okay. And as you can see, we're adding Ethereum per share. Our Ethereum held per share is 10 times higher than it was on June 30th. That's the reason why the stock is outperforming, because we're growing your share holdings of Ethereum. And we also if Ethereum gets to 12,000, which I think is reasonable, in the next 12 months, Forbes, then our staking rewards would jump to $2.4 billion. Months, then our staking rewards would jump to $2.4 billion. Understand who Mr. Beast is. And as you can see, we're adding Ethereum per share. Our Ethereum held per share is 10 times higher than it was. We were aware of this when we made our investment into Beast. That's the reason why the stock is outperforming, because we're growing your share holdings of Ethereum. But here's the thing. And also if Ethereum gets to 12,000, which I think is reasonable, in the next 12 months, then our staking rewards would jump to $2.4 billion. Months, then our staking rewards would jump to $2.4 billion. Mr. Beast is. And as you can see, we're adding Ethereum per share. Our Ethereum held per share is 10 times higher than it was when we made our investment into Beast. That's the reason why the stock is outperforming, because we can't
led to the run-up in ETFs, and I think crypto ETFs specifically, is ease of access, right? Because it opened up a vehicle that gave access to people that didn't necessarily know how to go and open up an account on a crypto exchange, the ability to transact in their traditional brokerage account to gain exposure to an asset class that they maybe had an interest in but didn't know how to access it previously. It can also be distributed through a number of different channels, through advisors, other platforms. And I think that it's that, as well as the ease of use for institutions, that really led to the surge in AUM, really.
Mark Jansen, Co-Chief Trading Officer at Flow Traders, Global Head of Trading. We're active for about 2 decades in ETFs. We're globally one of the main market makers there. And since 2017, also active in digital assets. But yeah, from that perspective, fully agree on the access ETFs bring. It drives extra demand, and that's also what drives this surge, in my opinion.
Yeah, I'm Enzo Katz. I'm the co-founder and CEO of Talos. We're the largest provider of trading technology to digital assets, primarily for larger institutions. We play a pretty big role these days in the ETF because we are powering quite a lot of underlying trading for the ETFs. We are facilitating the Bitcoin and the Ethereum and quite a few other assets trading. So we have a front seat to what's happening on the ETF domain. When you're asking like whether there was a surge in ETF and the demand, I mean, honestly, it's a little bit of a lopsided question. I think door to institutional investors that can finally use the vehicle to plug into their existing risk tools, existing trading infrastructure, existing reporting infrastructure, all those kind of things that they kind of need to rethink when they're interacting natively with digital assets.
Great. Can I get the first slide, please? So yesterday, CoinDesk reported that U.S. Bitcoin ETFs registered back-to-back inflows for the first time in a month. And despite Bitcoin being down over 40% from its October high last year, total BTC held in ETFs only dipped 6%. So Timothy, I'm going to kick this to you first. Did the ETF market pass its first real stress test?
I think it did, because what you saw is as the prices went down, as usually happens when prices go down, people started to sell, but it wasn't a fire sale. The system's all held in place, and once asset prices reached the low 60s and Bitcoin bounced off of that level, you saw people start to buy again, as you usually see when things start to go up. So I don't think that anything unexpected happened there, and I think that, yes, passed the stress test.
Okay. So Anton, since you were bringing up regulation, let's talk about the hurdles with that. So even with Trump's regulatory tailwinds, we're still waiting on that comprehensive market structure bill in the States. Is the lack of clear federal regulation the biggest blocker for adoption?
I would say that it's definitely a major one for quite a lot of institutions. I think that, you know, the difference between 2026 and 2022 is that there was quite a lot of headlines in 2022 generated by the different organizations saying, we're going to be participating in this market, we're going to be adopting. Today, I think we're seeing a little bit more of a muted approach from the media side. So there's not as many of these like big banners, we're in digital assets, we're doing this, but actually behind the scenes, because, you know, those are our clients, we've seen a lot more activity these days than we've seen in 2022. You know, in 2025, our clients the new clientele has completely lopsided towards, so we have more traditional institutional clients in 2025 than in the previous years, which is kind of like seeing this. So, yes, of course. I mean, a lot of them are looking to see like what's happening with the Clarity Bill. They're looking to see what's happening with the regulators in terms of bifurcation of regulation, right? What is the SEC going to be responsible for? What is the CFTC is going to be responsible for? And I honestly think we're very, very close to that. So a lot of institutions right now are operating and pushing forward as if we are about to see much, much more clarity there. But yes, regulation and policy has been one of the larger barriers for this industry for quite some time.
Okay. Can I get the next slide, please? So on the flip side of hurdles, let's look at the banking seal of approval. Last October, CoinDesk reported that JP Morgan began accepting spot BTC ETFs and collateral for loans. Does that make officially, or does that move the ETFs officially into away from being end the speculative asset debate? Anyone? You want to take it, Mark?
Yeah, I don't necessarily agree with let's say that question in particular, because they're allowing ETFs as a pledge, not the spot itself. It's mainly the ETF.
Okay.
So it's mainly the vehicle itself, which they allow. They already allow multiple ETFs as collateral, and also a lot of other products. I think it is a small step that they also allow Bitcoin, which does improve capital requirements, also from different participants. But I wouldn't go as far as that, this is the major step that spot Bitcoin is becoming the new gold standard.
Okay. Anton, do you agree with Mark's conservative
Sometimes I agree with Mark.
approach?
But it's
Luckily, not always.
Not always. Yeah, look, I mean, I think it's in our industry, it's always been a little bit of crawl before you walk, before you run. I do see this as an interesting step. Is it a huge, major step? Probably not not to an enormous degree, but this does start to say, look, I mean, before that, in primes and in some of the banks, crypto ETFs specifically were not accepted as collateral. That is actually a huge deal. They were specifically excluded as collateral. So if you held assets in crypto ETFs, you might not enjoy some of the same margins that you would enjoy with a prime. Today, that's changing. That's actually a very, very positive thing. Having said that, if you actually look at the details, I mean, it's an awesome headline, but if you look at the details, there's still quite a lot of issues there, right? We are looking at haircuts that are significantly higher than the haircuts we have on treasuries, for instance, as collateral. And then, but if you look into the future, I think that's kind of, you need to get comfort, you need to get your risk systems in order. But we are also seeing that a lot of the institutions that are starting to talk about lending assets against direct crypto collateral. So against crypto, against Bitcoin, against Ethereum, also a step in the right direction. So I don't think we're there yet, but this is the entire point, is to have those tools in the entire financial economic system.
I do agree it's baby steps, but collateral-wise, we're definitely not there yet. We're paying as a market maker way higher capital than other ETFs. So for cryptos, especially if we post our collateral at banks, our leverage is very small in these ETFs, and that also doesn't help with reducing the volatility in the ETF versus the underlying.
Yeah, one thing that I would say here that you need to keep in mind is that an ETF trades as an equity, so this didn't require anything in terms of infrastructure changes to enable this. It was just simply a change in view. Whereas accepting actual collateral of Bitcoin or ETH or any other digital asset for that matter, that would require real infrastructure change. And I think that would be a bigger step than simply allowing Bitcoin or Ether as collateral.
Yeah.
ETF, Bitcoin or Ether as collateral.
Yeah, I think for the infrastructure side, we are the largest, maybe one of the largest OTC counterparty with a lot of banks on the street. So different banks have a different approach. We do see that the testing internally, for example, adopting blockchain technology and build up the internal tokens to allow either you're claiming or is bank transfers, cash movements. We are talking about a lot of hurdles when we transfer collaterals. Regulatory-wise, I think as a bank, they have a different layer of regulation as well. Mm-hmm. So even though we can say JP Morgan would like to take it, but what about Basel? What about MiFi or those guys going to define whether even stablecoin, we never heard about, they can accept stablecoin as a collateral, right? So there are several steps that requires different layer of regulation working together, allow those bigger players within
led to the run-up in ETFs, and I think crypto ETFs specifically, is ease of access, right? Because it opened up a vehicle that gave access to people that didn't necessarily know how to go and open up an account on a crypto exchange, the ability to transact in their traditional brokerage account to gain exposure to an asset class that they maybe had an interest in but didn't know how to access it previously. Can also be distributed through a number of different channels, through advisors, other platforms. And I think that it's that, as well as the ease of use for institutions, that really led to the surge in AUM, really.
Mark Jansen, Co-Chief Trading Officer at Flow Traders, Global Head of Trading. We're active for about 2 decades in ETFs. We're globally one of the main market makers there. And since 2017, also active in digital assets. But yeah, from that perspective, fully agree on the access ETFs bring. It drives extra demand, and that's also what drives this surge, in my opinion.
I'm Anton Katz, I'm the co-founder and CEO of Talos. We're the largest provider of trading technology to digital assets, primarily for larger institutions. We play a pretty big role these days in the ETF because we are powering quite a lot of underlying trading for the ETFs. We are facilitating the Bitcoin and the Ethereum and quite a few other assets traded. So we have a front seat to what's happening on the ETF domain. When you're asking like whether there was a surge in ETF and demand, I mean, honestly, it's a little bit of a lopsided question. I think
in terms of adoption compared with U.S. Treasury and gold, U.S. we do see that happens. Yeah.
Do any of you want to touch on that briefly?
Yeah, I think that if you're to think about digital assets going into treasuries of companies, if you're talking about Bitcoin as an example, I think that it depends on the company. I think that if you're talking about stable coins going into treasury, there's some real utility to have that as opposed to bank accounts because of the ability to transfer money between entities 24/7 over weekends with lower fees, right? And that's something that has real value to companies, but that I view as something that's a different decision than what is the actual allocation of the assets.
That can finally use the vehicle to plug into their existing risk tools, existing trading infrastructure, existing reporting infrastructure, all those kind of things that they kind of need to rethink when they're interacting natively with digital assets.
So there's definitely part of them
can I get the first slide, please?
Allocating parts of their balance sheets towards
so
crypto.
Yesterday, CoinDesk reported that U.S. Bitcoin ETFs registered back-to-back inflows for the first time in a month. And despite Bitcoin being down over 40% from its October high last year, total BTC held in ETFs only dipped 6%. So Timothy, I'm going to kick this to you first. Did the ETF market pass its first real stress test?
I think it did, because what you saw is...
Yeah, it sounds really like a cultural shift, a cultural difference. Tell me a little bit more about on-the-ground marketing, because I don't think we see it enough in crypto. Of course, we have this event where we're here IRL, but it is really a special thing for a lot of folks who are building. So we don't talk a lot about this like experiential IRL focus.
Things start to go up. So I don't think that anything unexpected happened there, and I think that, yes,
before you were at CSOP. So Anton, since you were bringing up regulation, let's talk about the hurdles with that. So even with Trump's regulatory tailwinds, we're still waiting on that comprehensive market structure bill in the States. Is the lack of clear federal regulation the biggest blocker for adoption?
I would say this is definitely a major one for quite a lot of institutions. I think that, the difference between 2026 and 2022 is that there was quite a lot of headlines in 2022 generated by the different organizations saying we're going to be participating in this market, we're going to be adopting. Today, I think we're seeing a little bit more of a muted approach from the media side. So there's not as many of these like big banners, we're in digital assets, we're doing this, but actually behind the scenes, because those are our clients, we've seen a lot more activity these days than we've seen in 2022. In 2025, our clients are the new clientele has completely lopsided.
Give me like a real use case. Talk me through something successful that you've been a part of.
Imagine, like Consensus is like the biggest event, and a lot of this meetup is like a decentralized event in a way, right? And a lot of them is actually not launched by the team. It's actually by all these like smaller communities, right, on the ground. For example, like Solana, right? They have something called Super Team, right? They actually, I think they started from India. I think it's India, right? And then they all these like community members, right? They voluntarily to set up some meetups to find the builders, right? They find the participants in the space, and then they meet up, they talk about it, they discuss new ideas, right? For me, we also have meetups in Hong Kong, in different parts of the world. Whenever we have events, we also try to meet our owners, right? I think this doesn't really happen, right, in the past, right? When you look at like all these like big companies, like crypto, people talk about community all the time. I mean, whether it's like bullshit or not, I think that's another question, right? But at least I think a lot of people, they feel that they have a stronger ownership. I think that makes them, I want to show up, not just because they started from India, but I think it's Indian people, and then they have the same ideas. I think that part is very important.
Yeah, we have our guild communities in different regions, different cities from around the world, and they are the ones that really hold the community, they do the onboarding, so we don't have to do a lot of work in just ourselves. A lot of the teams actually carry the work for onboarding for us, and it's our job to empower these guild communities, to give them opportunities, and then they in turn can do the recruitment of people into it.
Great, and kicking it back over to you now, what does it mean for you to be at an event like Consensus in Hong Kong? What are you looking forward to?
I was born and raised in Hong Kong, right? Consensus coming to Hong Kong is a big thing for me, right? Because on one hand, it shows that, okay, finally, right, Hong Kong or Asia, right, gets more spotlight from the bigger crypto events, right? And the other thing is, Hong Kong government is very welcoming Consensus in Hong Kong. This is like a realization of what they promised, right? Because Hong Kong has been talking about, they want to promote Web3, they want to support Web3 for 2-3 years. I think this is like I would say this is like a milestone, because, okay, you can say that all these like community members, right, they regulation and stuff, they voluntarily do something. You welcome, all the builders, you welcome all these like participants in Hong Kong, right, without a lot of like all these like very strict like regulation and stuff. I think that part is a good thing, right? You find that to me, in the space, and then they meet up this morning, right? You have one of the highest like new ideas, right? For me, keep opening meetups, I think that shows, okay, in different parts of the world, whenever we have events, we also try to meet Asia, right? I think this, and I think doesn't really happen, right, in the past, right? When you look at all these companies in Hong Kong, I wish that people talk about basic Hong Kong time. I mean, whether it's like bullshit or not, I think that's another question, right? But at least, I think a lot of people, they feel that it's a little bit stronger ownership. I think that makes them, I want to show up, not just because I want to pump my back, right? But I also want to meet people who share the same ideas. I think that part is very important.
Yeah, we have our guild communities in different regions, different cities from around the world, and they are the ones that really hold the community that far away, so it's onboarding. So I really like that a lot of these major conferences are coming to Asia, just ourselves, a lot of Asian point of view, and when you say Asia, of course, and it's our job to empower these Asia, there's Southeast Asia, and you can see a lot of the different influences come together here into Web3.
All right, thank you both. Great, ready to hear the desk from show now. What does it mean for you to be at an event like Consensus in Hong Kong? What are you looking forward to? That was you'll gain a co-founder Gabby's on, and
Consensus coming to Hong Kong is a big thing for me, right? Because on one hand, it shows that, okay, finally, right, Hong Kong or Asia, right, gets more spotlight from the bigger crypto events, right? And the other thing is, Hong Kong government is very welcoming Consensus in Hong Kong. This is like a realization of what they promised, right? Because Hong Kong has been talking about, they want to promote Web3, they want to support Web3 for 2-3 years. I think this is like, I would say this is like a milestone. Because, okay, you can say that you support it, you can have a regulation and stuff, but at the end of the day, do you welcome all these builders, do you welcome all these like participants in Hong Kong, right? Without a lot of like all these like very strict like regulation and stuff. I think that part is a good sign. And to me, you can see that, okay, for example, this morning, right, you have one of the highest like government officials in Hong Kong to give the opening speech. I think that shows, okay, Hong Kong is actually trying to do its best in Asia, in the world, right, for crypto. And I think I'm happy for that. Because I'm based in Hong Kong, building in Hong Kong. I wish that we can be based in Hong Kong and then create our service, provide our products, right, to the world. Yeah.
Raised from Hong Kong, so he's a little biased.
Totally biased.
Gabby, what does it mean mean for you to be here, given your journey in crypto? I mean, really, you're at the forefront of play to earn, forefront of pushing this like Web3 gaming narrative that continues to build and iterate. What does it mean for you to be sitting at Consensus in Hong Kong?
Well, I come from the Philippines, which is not that far away, so it's I really like that a lot of these major conferences are coming to Asia and seeing the Asian point of view. And when you say Asia, of course, there's China, there's Hong Kong, there's East Asia, there's Southeast Asia, and you can see a lot of the different influences come together here.
All right, thank you both for joining us here at the desk. I'm sure I'm going to see you around the conference, and I hope you have a wonderful time.
Thank you.
Awesome. That was Field Guild Games co-founder Gab Shizan and Mainland CEO Ray Chan. We are now going to go to a stage and see what folks are talking about.
Access to people that don't necessarily know how to go and open up an account on crypto exchange. The ability to transact in their traditional brokerage accounts to gain exposure to an asset class that they maybe had an interest in and didn't know how to access it previously. It can also be distributed through a number of different channels, through advisors, other platforms. And I think that it's that as well as the ease of use for applications that really led to
Mark Johnson, Chief Trader of Flow Traders, Global Head of Trading. We're active for about 2 decades in ETFs. We're globally one of the main market makers there. And since 2017, also active in digital assets. I fully agree on the access ETFs bring. It drives extra demand, and that's also what drives the shirt, in my opinion.
Founder and CEO of Dallas, one of the largest providers of digital assets larger institutions. What they've been doing all these days are the ETF, a lot of underlying trading for the ETFs, offsetting the Bitcoin and Ethereum and quite a few other assets. So we have a fairly steep take on the ETF demand. When you're asking whether there was a surge in ETF demand, honestly, it's a little bit of an abstract question. I think
I think that if you're thinking about digital assets, what you for companies, if you're talking about Bitcoin as an example, I think that it's very fundamental. I think if you're talking about stablecoins, there's some real utilities to have that as opposed to banking of the ability to transfer money between entities 24/7 over weekends.
So we believe also
with low fees, right? And that's something that has real value to companies, but
you have to take the good with the bad.
That I view as something that's a different decision.
What's the if you finally use the vehicle to plug into your existing trading infrastructure, which I think things that they're adding to the things about to change. Early adopters, that's definitely part of the
don't really hurt Bitcoin.
Yesterday, CoinDesk reported that U.S. Bitcoin ETFs registered back-to-back inflows for the first time in a month. And despite Bitcoin being down 40% from its October high last year, total BTC holding ETFs only dipped 6%. So Timothy, I'm going to keep this to you first. Did the ETF market pass its first real stress test?
I think it did, actually, because
it sounds really like a cultural shift, a cultural difference. Tell me a little bit more about on-the-ground marketing, because I don't think we see it enough in crypto. Of course, we have this event where we're here IRL, but it is really a special thing for a lot of folks who are building. We don't talk a lot about this like experiential IRL focus.
I don't think that anything on a small yes.
So Anton, since you were bringing up our show, let's talk about the reals. So even with Trump's regulatory tailwinds, we're still waiting on that comprehensive multi-structured adoption. Is the lack of clear federal regulation the biggest blocker for establishing specific cultural
It's definitely a major one. I think quite a lot of institutions are the difference between 2026 and 2022 is that there was quite a lot of headlines that were generated by the researchers who were participating in this market building objective. Today, I think we're seeing a lot of push on the media side. So not as many of these like
the ability to digitalize intelligence, but actually behind the scenes, because those are clients, we've seen a lot of activity these days that we've seen in 2022. In 2025, our clients are, the new clients are, completely looks like
Welcome back, everyone. Quite a time for something successful as you invite new media artist Siobhan Wong. Hello. You and I are going to be on the emerging tech stage later. I'm very excited about that. Let's talk to our audience who's watching at home, who are new media artists that really leverage AI in your creative work. Talk to me about how AI has helped elevate
Oh my god, I think like AI has changed a lot of the way I work in the sense of like how it helps me, be a lot more efficient, a lot more effective. But I think like with being an artist, I think my focus has been like looking at how AI changed the world. And to me it's like, obviously as an artist then I can use AI to talk about how the world changed along with it. So like I think with the advent of AI coming to the world, like it's given me as an artist a lot of content and source to like really create works coming from it. And it's really something I enjoy because it's such a fascinating topic.
You know, I've told you this before, when I think about AI, I think about it as a human mind, but there are a lot of things to think about AI and technology. It's something that's really scary for a lot of people. And artists in particular, talk to me about how you respond to folks who hear about what you do and get scared about how AI might influence their career.
Well, I think it's one of those things that, you know, it's just going to happen anyway, no matter how you feel about it. Like, no matter if you're scared, if you're angry, if you're worried, like, the world's not going to stop, it's just going to come, right? So I think we can acknowledge it, we can acknowledge all of that, but after that, I think it comes to a practical stage of like, all right, the world really is, how do we go forward, how do we go on from that? And I think it's important, again, to acknowledge all the issues that come with it, and then how we can work on top of it, right? Because I think in the coming future, AI is going to be part of everything. It's going to be so hard for anybody out there. I don't want to use AI because it's just going to be part of everything we use. You know, you and I are going to be on the first time, you know, when it comes to everything, like about that. Everybody will be using AI so we don't even realize that. So really, leverage AI in our creative setting and ultimately how AI is figure like, all right, well, this is the world we're going to look like. Well, I'll think like, what do I want to do? I create if instead of AI, how we can create will be a lot more efficient. So that's right. But I think like feeling the art and so yeah, my process has been like starting to feel useful and artists like, create work artists then I can use AI to talk about how the world changed along with it. Now, you're right with the AI advent of AI coming to the world, like I think it's given me as an artist a lot more content and source to like really create works coming from it. And it's really something I enjoy because it's a fascinating topic. Collaborate. Now, I think about AI that is created as an artist where I was like, really proud of the work of AI. Like places where AI is going and before I wonder, I do a lot of thinking about humans coming from it, right? Because I think like, yeah, companions, you know, AI friends, no friends, replacing them with AI, replacing, having someone possibly having, yeah, so like this is one of my sides that it's happening, it doesn't matter how we realize it, right? And humans are going through it, and if your work is based on top of it, so I can't, right? So I think like, so we go acknowledge it, and after that, we can get to a practical stage of like, alright, so like, how do I work, how do I roll it, how do I work, I know how you get it, like, all your wish I could do it, and how do I work on top of it, right? Because I think that part of it, it's important to have this where they are relationships and eventually that's just going to be everybody wants to know AI, they want to be seen, you know, when it comes to this, they want to have these more sometimes I never realized we're so like this. That's why freedom, right? Like, I think this is a reality, and humans are going to have to make choices based on top of that. So I agree about the question. I also agree that right? And I think that because it's important to have
When you're
looking at, I think, all the
One We're at a point now where things can go so much faster than they have before, partly because LLMs, they do accelerate software development, right? Even though they're not AGI, they can make it faster for us to code the AGI, which is amazing to be experiencing, right? So I mean, I tend to agree with Sam Altman from OpenAI, Dario Amodei from Anthropic. You know, we could be 1 year, 2 years, 3 years from, you know, a breakthrough to machines that are as smart as people. But I think we can do it in an open and decentralized way so that the AI can then grow, you know, for the good of all humanity rather than just the shareholders of some particular company.
Ben, it was a pleasure having you on the desk. Thanks so much for joining us.
Thanks for having me.
We'll see you around the conference.
Yeah.
Thanks, Ben. That was Singularity Net CEO Ben Gortzel. We are going to take a quick break. We'll be right back.
The full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Joining us now at the desk is Evan Cheng. Evan is the CEO and co-founder of Mistin Labs, the original creators of the Sweet Network. Hey, Evan.
It's great to be here.
Great to see you. We're here in Hong Kong. You're speaking at Consensus, and you're talking about digital asset treasuries. Give us a little preview about...
Well, I already talked about it.
Give us a little preview here.
Well, so this is really to talk about the sort of almost like the institution flows and the interest from institutional TradFi in our emerging industry. It's a great thing. You know, more interest is better. It's even more interesting is they're trying to make use of the blockchain, the decentralized infrastructure we've been building, and that's really the exciting part.
How are you thinking about DAOs as like a complementary aspect to the SUI ecosystem and public markets, right? Because it is providing exposure from that perspective. But what do you see as like a key unlock with it?
Well, so I think the real unlock that we're going to be seeing is, TradFi integrating with sort of DeFi as sort of next step, or TradFi utilizing the Sui stack and other to build more interesting product to make their own operation more efficient, to service their customers better. So we're, I think what I talk about is if you think about TradFi products is T+1 or T+2, then DeFi products are T+0. So if you tokenize something that exists in the market today, that money, the asset moves faster, that's much more composable. And that's really the exciting part. This week, in addition to being here and talk with you and talking at Consensus, really about kind of finalizing those conversations. And we have a lot of exciting things that's coming up.
When we talk about TradFi and institutional adoption, there are a few chains that come up over and over again, two of them being Ethereum and Solana. When you're talking to the TradFi players, how do you position Sui? Why can Sui be an infrastructure play for the TradFi players?
So if you see the evolution of Sui, in about 4 years, we build Sui, we build Wars, we build Seal, we build Nautilus, right? So it's a whole stack under one umbrella. It's sort of like using one SDK. You can deal with smart contract execution, you have coordination, you have data management, you have secret management, you can do private transaction, you have private club, all in one. So why is this important? Because fragmentation kills speed, and fragmentation make capital less efficient. Fragmentation make it harder to identify risk and deal with risk, right? So this is really we've been building towards this. This is really, finance is going to benefit a lot from this integrated solution we've been building.
I saw that Sui Network recently became one of the 2 non-EVM chains to get a full Coinbase integration. So what does that really mean for the ecosystem and then traditional users on Coinbase?
More exposure to the Sui ecosystem. We're really grateful for the Coinbase trust in us. They obviously see something and they saw the numbers. We're one of the fastest growing developer platform. So they already list Sui, all the major tokens, and now they can list more of the sort of Sui ecosystem tokens, and that's great for the ecosystem and it's great for the Coinbase users.
I want to come back to the digital asset treasury conversation for just a moment. I know Sui Group, the digital asset treasury company, has an official relationship with the Sui Foundation, which is something that not all digital asset treasury companies have. Just talk to us a little bit about what that actually means. What are the benefits for investors that are looking at the digital asset treasury to have the foundation involved?
Yeah, Sui is really different, right? They're not a passive holder of the asset. They're really working to add value to their ecosystem. For example, they're launching a stablecoin, and the earning, the yields can flow back into the ecosystem. They're more operators. Mm-hmm. They're more active in the ecosystem. That really make them different. So it's really great for them to work with the foundation to say, where can they add value to the ecosystem? How do they work together? That's what makes them different from a lot of other dApps out there.
In the beginning, Evan, when you came on, you talked about the race for institutional adoption or the opportunity on that front. How do you kind of think about growth there with dApps in mind, yield-bearing stablecoins, and so on? What really stands out the most for, I guess, like the acceleration and maturation of the space?
Yeah, I think when you see the same kind of experience people have with TradFi, the money app, the fintech app, how their relationship with their asset and money, sort of taking on the next step, right? Same kind of experience, low friction, but move faster, more composable. If you can buy, let's say, Go. Everybody here wants to buy Go. You can click a button and buy Go, but you probably can't make use of the Go as a collateral right away. But as opposed to tokenized product with DeFi, all of a sudden you could have that T+0 moment. You purchase an asset, you immediately can collateralize and make use of it, or perhaps in the same app. So those kind of experiences really, really going to sort of open people's mind. That's going to create demands, and that's, could be one of the biggest unlock that we're going to see.
Now, we're here at Consensus Hong Kong. I've been saying this all day. At CoinDesk, we're based in New York, so we very much focus on North America and the Western world over there. But talk to us about the significance of you being in Hong Kong, having this institutional conversation. Talk to us a little bit about how institutions are viewing Sui in this part of the world.
Yeah, it's really interesting. We see a real desire to stand out, to reestablish Hong Kong as sort of a hub of financial innovation. Not that it hasn't been, but it's sort of right to try to reestablish itself again, capture that magic. So the eagerness, the energy here it's really, really high. So New York has its way of doing things. Hong Kong has a way of doing things. I can't wait to see the two hubs compete and see who can out-innovate the other.
Are there any specific conversations you're having in Hong Kong right now that have been noteworthy that you could share with us?
I can't share, but wait until after Chinese New Year. There will be some pretty big unlock that happens.
And you'll let CoinDesk know first?
We'll let Coin know very, very quickly.
There we go.
You said we'll see who comes out on top between New York and Hong Kong, or the U.S. and Hong Kong. What region do you think it is? And you don't have to pick one maliciously, but where do you see the most progress? Where do you see the most openness to innovation? Where do you see the most builders innovating as well?
Yeah, it's hard to quantify. Really, it's different. I think New York, the big institution, there's a lot more sort of, hoops to jump through.
Yeah.
You already seen, in the last few weeks, there's a lot of announcements of things that are happening. They were kind of coming into the space. Perhaps in Hong Kong, it's a little bit smaller firm, but it's still very, very significant. They can move a little faster. They may have more direct relationship with consumer. That's going to be different from sort of the New York financial giants. I'm not going to put my head out there and predict who's going to win. I think it's going to be a bunch of different products which will then inspire each other. I'm really excited about what I'm hearing here in Hong Kong.
Yeah. Evan, it's been such a pleasure having you at the desk. We hope you enjoy the rest of Consensus, and thanks for spending the time with us.
Thanks for having me. Thank you.
That was Evan Cheng, the CEO and co-founder of Miston Labs. The breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Our next guest joins us now, co-founder and executive chairman of Animoca Brands, Yat Su. Animoca Brands is focused on building the infrastructure layer of the digital economy. Yat, thanks so much for joining us. Thanks for being here.
Thank you for having me.
All right, I think that you are going to have a more concrete answer. We just asked Evan if he had to choose between Hong Kong and New York when it comes to innovation and I guess the acceleration of adoption on both the institutional and retail side. Which would he choose? He didn't really give us an answer. He was excited about both.
Well, I mean, I am excited about both.
Okay.
However, I think in terms of sort of the path of adoption, I would have to say Hong Kong is probably better placed because there's just, first of all, population-wise, there's just a lot more people in Asia than in America. Two, I think a lot of the adoption on the institutional side, at least the interest, in America has already happened. However, when it comes to total capital allocation, New York's going to be better. I mean, from a stock market perspective, from a capital markets perspective, America is clearly bigger. But from a mass adoption user perspective, I think Asia is going to be the center of it.
A common narrative we've heard today at the desk is that, Hong Kong is just smaller, so it can move a lot faster when it comes to some of the regulatory processes, and institutions can experiment a little bit more. And so it's interesting to kind of juxtapose the two.
And Hong Kong is also a very good sandbox. I mean, even think about what happened with sort of early mobile phone adoption. Hong Kong, I think, was the very first place in the world that had a sort of a ratio of more than one sort of mobile phone, for instance, because everyone's having one or two or three, for instance, right? And so you can kind of see how that kind of sort of develops. And it's also a very sort of tech-savvy environment as well. So it has a combination of being a tech user as well as very, very financially savvy as a financial center.
Mm-hmm.
Yeah, I heard earlier today that some of Animoca's biggest themes for 2026 is focusing on RWA and AI.
Yes.
Two very big acronyms right now,
Of
very
course.
hot topics.
Yeah, sure.
Aside from that, what makes you guys really want to hone in on that?
Well, I mean, I think when you think about where the web is evolving, right? Everyone earlier talked about Web3, the web of ownership. Blockchain and tokenization provides that infrastructure. RWA is just another way in which that physical infrastructure and physical assets can move on chain. However, who are the ones who are going to be sort of handling these tokenized assets? It's going to be AI agents, right? And in fact, I would argue that the next phase of Web3 is essentially the agentic web. Some people call it Web 4. I'm not sure if that's the term, right? But this agentic web is going to be using what assets? It's going to be using tokenized assets. It's not just going to be stable coins. It's going to be maybe tokenized gold, real estate, that kind of stuff, right? And if agents are going to do peer-to-peer sort of trading and business with each other, then you have to be able to sort of verify those assets, and that's basically where agentic AI can come in. And we're quite focused on this ourselves with Animoca Minds. But the other thing, of course, is that when you think what happened with OpenClaw, right? It's still a small market right now, but it's sort of really unleashed the imagination where people get to realize, wait a second, we're actually going to be now entering a phase where the interface changes. Because right now, AI's interface is still search. It's basically just Google, just with more intelligence. The next phase is where essentially we're going from HTTP to MCP.
Yeah. I know you're really focused on digital property rights, and given your background, I mean, the conversation has shifted from what you and I were talking about 2 or 3 years ago to now we're talking about RWAs and AI. If we're thinking about agentic AI and a crypto world where AI agents are acting on our behalf, where does that digital property rights conversation come back into play?
Well, the basics on property rights and ownership still has to happen.
Yeah.
If I don't own it, then I can't trade it. It's as simple as that, right? So the question, of course, is, well, if the AI agent trades it, does the AI agent own it? Ultimately, the AI is acting on behalf of a human, right? Or humans, for that matter, or a company or an organization. And so the property rights goes towards that. And I think this is a wider debate that's happening as well, right? Because within the crypto world, I think there's a camp evolving, which was the same camp, by the way, that was anti-NFT 6 years ago, right? Saying, blockchain is only for finance. It's only something that is improving finance. It's big enough as a market. And I would strongly disagree, because the moment we start to say it's only about finance, we essentially alienate 95% of the world, because most people don't look at money as the end. Money is a means to an end, for the good life, for having a happy family, for being able to pay for your students, for your children and that kind of stuff, right? And the other thing is, right now we haven't had a lot of new people enter crypto on the retail side, right? It's been mostly institutions. In fact, the market's held up by institutions, which makes sense when you say we need to focus on finance. But the biggest event where we added a lot of people was 21-22. It was NFTs, it was metaverse, it was gaming. That's the audience that came in and didn't actually leave crypto, right? And what we need are the kind of events where we bring the rest of the world into crypto. I'm not happy that we're going to have hundreds of millions of people have crypto. We need to have billions of people own that. And the way to do that is basically through an agentic framework where you can now talk to an AI to get you into this industry rather than basically dealing with MetaMask.
I know earlier today you also kind of outlined the case for a multi-asset DAT. What's your thesis there, and why do you think investors want, exactly
Animoca is going public, right? Through a reverse merger with Currency. The whole idea of the so I wouldn't call it a DAT per se. It's kind of gotten a bit of a mixed reputation, the name.
Yeah.
But the point is still that you want exposure to this new market, right? And our vision is that basically the utility tokens are kind of like basically public stocks, and Bitcoin is kind of like gold. And that's why we believe tokens broadly outside of Bitcoin are collectively going to be larger than Bitcoin, which it is not right now, because how do we enter and experience the world of crypto? We do it through an altcoin of some form, or through gas fees, or through gaming, right? And Bitcoin itself basically is kind of where we save our crypto, just how we treat gold and the stock market.
Give me a timeline. How long is it going to take for the retail user who has not experimented with crypto yet to talk to an AI agent and say, I want to do this. Maybe it's powered by crypto. Like, when does that next wave of retail come in?
Next 12, 18 months.
That's very soon.
It is very soon. But think about what happened with the AI adoption just on things like ChatGPT. And the problem about OpenAI is that now they're selling you advertising. So they want you to go to the website, right? And Google will want the same thing. However, there's a new industry that's evolving. Again, OpenClaw kind of opened that for the imagination, but right now it's just still in the realm of geeks. Maltbook, it's basically 99% agents run by 1% humans, so it's still sort of Wizard of Oz-ish. However, eventually, and I think it's going to happen very fast, when the AI agent goes into your home and does stuff, even just over email, the magic happens. I mean, it's handling schedules for my children. It's basically able to sort of, put sort of a calendar entries. It has a wallet so it can trade some NFTs if it wants to, right? It's so much easier. It's a kind of interface that my mom can use, and it's something that we'll feel much more comfortable with. So I think it's going to happen very, very fast.
Yeah, we got to let you go, but I was taking a stroll on the showroom floor earlier, and I saw you maybe operating a robot.
Yeah, it was real steel, for real. Yeah, exactly.
Jeff Wilser. Can you tell us about what was going on over there?
Yeah, no, it was awesome. I mean, basically we had an AI robot fight. I was using a controller that looked like it was a hacked Wii interface, and we're basically just fighting with robots. And again, 10 years ago, people would have thought that it was kind of science fiction, and here it is. The fascinating thing is, it was a lot of fun. Fortunately, I did win with a knockout blow at the end, but it's a very non-violent way of boxing. I know in crypto, some people like to go have their fight nights and have bruised eyes and whatever. I prefer not to do that. I think I prefer the robot basically doing the work for me.
All right, yeah, congratulations on your win, and thanks for joining us at the desk.
Thank you for having me.
Thanks, yeah.
All right, that was Animoca Brands co-founder and executive chairman, Yat Su. Let's head on over to social media now and take a look at how attendees are experiencing Consensus Hong Kong. All right, here we have some photos of booths, and I can't see them anymore. Oh, here we go. All right, Consensus Hong Kong is high quality. I would agree with that. I've taken a walk around, taken a look at the booths. It's been really high quality booths, high quality conversations that we've been having. Let's see. Doors are officially open to the EZA Consensus Hackathon. Jackie, have you gone down to see the hackathon, folks?
No, I haven't, but I can go after this.
Yeah, you can go. Back. You can definitely go after this and report back. We're going to talk to the hackathon winners tomorrow, so stay tuned to our programming. We'll give you an inside look of what's going on over there tomorrow. And standing room only at the Bit Robot Network boxing match. We were just talking about that with Yatsu. So lots of fun happening here at Consensus Hong Kong. Jackie, thank you very much for joining me. It was so much fun co-hosting with you.
Yes, thank you for having me.
We got to check that prediction market. Maybe you'll just come back on CoinDesk all the time now.
Yeah, I know the answer to that one. All right, well, thank you so much for having me.
Of course, thanks for being here. Jackie's going to be back tomorrow to record Crypto in America from the CoinDesk Live desk at 12:30 p.m. local time. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Welcome back to CoinDesk Live from Consensus Hong Kong. We are bringing you conversations with some of the biggest names here at the event and highlights from the stages and showroom floor. Our next guest has been instrumental in bridging the gap between decentralized tech and the TradFi powerhouses in the Asia region. Joining me now is Solana Foundation's head of APAC, Lu Yin. Hi, Lu.
How are you doing? Thanks for having me.
Of course, thanks for being here. I'm kind of chained to the desk, so I've been asking all of our guests how they've been experiencing the conference, and I'm going to start with you the exact same way. What have you been up to? What have you been seeing?
It's been great. I mean, look around. It's such a vibrant community. So we've been working with Consensus. So we actually have Solana Accelerate down the street. And so very excited to be part of this community. And just walking around, you can still definitely feel the energy. And obviously, Hong Kong has always welcomed us with open arms. So very excited to be here.
Solana Accelerate has more than 2,000 builders.
3,000.
More than 3,000
Yes.
builders. The numbers increased since I checked. More than 100 fintech companies, more than 50 startups, more than 20 policymakers in attendance. Talk to us a little bit about Solana Accelerate. What do you hope the event is able to bring to Hong Kong?
absolutely. So from our perspective, we wanted an opportunity to showcase the Solana ecosystem. I think what sets Solana ecosystem apart is that we're not just traditional finance individuals, we're not just startup builders, we're not just policymakers, we're not just users. We're a combination of everything. We truly believe that having a robust ecosystem, you need to have multiple participants, multiple stakeholders. And so that's the kind of, I would say, overall ecosystem and the general theme and genre we're trying to push.
And specifically, I mean, given your role as head of APAC, how is Solana looking at the region?
Yeah, absolutely. I think what makes Asia unique is the fact that there is jurisdictional level differences across the different countries, cultural differences as well. So for Asia, you can't really have a one strategy that kind of overall maps across this whole region. So a lot of time I spend is to face off with regulators, financial institutions, payment companies, big corporations, but mostly almost at like a country by country level.
Talk to us a little bit about the regulatory conversation. It, of course, dominates the headlines in the United States. I've heard here at the desk today that because Hong Kong is a little bit smaller, it's a little bit easier to navigate regulation. Regulation moves a little bit quicker. But of course, there are multiple different countries in this region.
Yes.
Can create some kind of regulatory fragmentation. Talk to us about how you're working with regulators and how you're viewing regulations so that Solana can continue to build and innovate.
Absolutely. I think at a fundamental level, the US side is still kind of taking the lead. And I think a lot of the different countries within Asia are a close follow, right? What they want to do is kind of learn from the best set of practices that's available within the framework set by the US regulators, and then adapt it, localize it for their population, for their users, for their financial infrastructure, which I do quite think is prudent, right? To be able to manage your needs and the trade-offs that they have to make. So some of the things that we typically talk with regulators on are usually across three things. The first one is just overall education. Many regulators want to see what other institutions, what other central banks are doing overseas. Number two, they want to have a little bit of clarity in terms of the rules and regulations and how the thought process behind setting those. And the last thing in terms of it is kind of more like execution, monitoring. And a lot of that is related to technology. And we kind of partner with them in terms of figuring out what type of tools they need, what type of third-party tools, in-house built tools that might really facilitate kind of across those three different segments.
We've had a few conversations here at the desk today that's highlighted, institutional interest in the region, but they've also highlighted the fact that retail traders, retail investors are seemingly more active in the Asian region than in the West. What is the Solana Foundation's focus on specifically here? Is it more on the institutional side? Is it more on the retail side? Or is it really just kind of everything for everyone?
Yes, and we do think that across the different segments, we treat them, they're all important to us. But for example, as you mentioned on the retail side, what we really do care about is, are we bringing the best products available to the users? And what I truly mean by that is not just trading products, but are we bringing the best payment products that will bring real value to their day-to-day lives? Are we bringing real-world assets, tokenized money market funds that are giving them access to yield that are stable, secure, regulated? So our ability to bring a whole spectrum wide of different products for the short-term duration, medium-term duration, and long-term tenure products is very, very important to us. What we want to do is increase the ability for different users to access these type of services. And we kind of broadly term this as called internet capital markets.
Mm-hmm. And to develop these products, you obviously need to attract the builders,
yes.
right? I know that is one of the goals of Solana Accelerate, like you said, more than 3,000 builders in attendance. Talk to us about how, in such a competitive landscape, so many layer ones popping up, all trying to attract the best developers and builders, how you're thinking about that, how you're attracting the best ones into your ecosystem.
Yeah, absolutely. So I've spent a little bit of time in Silicon Valley as well, but we also have a very exciting and very strong developer relationships teams. I think a lot of it is kind of meeting the developers where they are, right? Number one, you do need to have a foundational product, which is the blockchain that's usable, stable, fast, cheap, so they can actually have the creativity to build useful products on top of it. In addition to that, it will be education, right? Teach them about our languages, teach them about potentially building certain middleware or API access, different types of tools, platforms, introducing them to the already built ecosystem partners such as DEXs, other DeFi protocols like Borrowland as well, showing them that whole broad range of tools that are accessible really kind of helps them fast track in getting into the Solana ecosystem and getting them, building right away.
Now, I got to ask you, over in the US, so many folks are calling Solana the infrastructure that's going to power Wall Street. One of the people who is saying that is Anthony Scaramucci. He's going to be on the desk later today.
Yes.
Talk to me about how that narrative translates in this region.
To us, again, kind of going back to our North Star, it's called Internet Capital Markets. And what we see is that the technology and the products available to Wall Street shouldn't be limited to just New York or California or to the United States. Why APAC is so important is because our goal, and we believe that our technology and our ecosystem and our partners should be able to leverage this blockchain technology to bring those products in a compliant, regulatory, safe manner to the global audience. Right? So in addition to just bringing Wall Street products to Asia, we're also working with Asian companies, issuers as well, to also bring some of their products overseas as well.
Looking forward to the rest of 2026, talk to me about the one or two big unlocks on your roadmap that you're looking forward to.
Yeah, definitely from the product side, Firedance is top of mind. So we're very, very excited kind of about the progress, and we'll continue to look forward to kind of their development and their timelines. I think more so than that, I think externally, we're definitely looking forward to updates from the regulatory side. I think a lot of the unlocks, and I think a lot of financial institutions, developers are also waiting on kind of the clarity. So once that happens, I think you'll see quite a big momentum and uptake in terms of usage, developers, builders.
Lou, thank you so much for joining me at the desk. It was a pleasure having you on the show.
Thank you very much.
That was Lou Yin, head of APAC at the Solana Foundation.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Welcome back to CoinDesk Live at Consensus, presented by Hex Trust, the leader in digital asset solutions. Our next guest is the president and general manager of crypto at Robinhood, Johan Krupat. Hey.
Good to see you again. How are you?
Yes, no, I'm doing well. I think you're doing good too. You had a big announcement this morning.
Yeah, we're really excited about it. We announced the launch of our public testnet, and so developer can start contributing on the Robinhood chain, and we really are focusing on financial assets coming into the chain. So really excited about it. And we also announced a hackathon that will be available in multiple cities across the globe with $1 million in prize.
Wow, there's a lot to unpack there. Now, so for our audience watching at home, we hear Robinhood chain public testnet. What does that mean? What can they take away from it? What kind of builders are you looking to attract? What kind of products do you want to build to offer the people who are watching?
Yeah, we want to focus really on the trading of assets, of financial assets. So perpetuals, DEX, lending protocol, all these kind of things. And we're already associated with a lot of partners, including Chainlink, Chainalysis, TRM, and way more. And so our goal is really to have the foundation that people can start building on. And slowly we'll be able to help them get validated by Robinhood, make sure that it works with all our system, and soon, they can participate to the hackathon as well.
Now, the conversation here at the desk has been largely institutional. I want to say a lot of the conversations we've been having have been about institutional adoption. You're so focused on retail, and so I'd love to just kind of unpack retail sentiment right now. What are you hearing from users on Robinhood? Yeah, what is retail interested in right now?
Yeah, I mean, we saw, with the price action, a lot of activity recently where the retail is not just, moving away from crypto. We actually see them buying the dip. We see them diversifying their portfolio to the long tail of assets. So we still see a lot of interest. We also see a lot of people engaging with staking, with transfer to their self-custody wallet and doing more things on DeFi. So, I think for us, it's just another cycle where now we also have institution coming in. We also see a lot of utility being developed with tokenization of assets. So overall, we still see retail excited.
It sounds like retail is becoming more advanced when it comes to crypto products.
Absolutely. I think, we see them being savvy. We see them looking at using stablecoin when they can, going to lending protocol. Retail want to make sure that they participate to the economy.
Talk to me about this $1 million in prize money. How are you looking to distribute it? What do I got to do? If I'm a builder, if I'm a developer, what do I got to do to get that money?
Yeah, I mean, right now, our public documentation is available, so you can start actually using it. You can start developing. It's based on the Arbitrum stack. So overall, it should be pretty quick for a lot of developers to start integrating it. And then you can contribute to the hackathon. We'll be there. The team, Robinhood will be there. I will be there myself in a few of them. And we'll look at the best application and we'll see the one that deserves the most of the prize and we'll distribute it.
You said it's going to be in a few different markets. Can you tell us what markets?
We have different cities. They are not all selected, but New York, London, Singapore are already in the running.
I imagine when I hear you talking that while this is a big announcement, it is one step towards a larger future that you envision. Talk to me a little bit about what that future is that Robinhood envisions when it comes to the financialization of things and how people are going to be interacting with all kinds of different asset classes.
Yeah, we think the future is around tokenization. We think all the traditional assets will be on-chain at some point. We think that, the blockchain brings 24/7 instant settlement, fractionalization by default. And so we focused a lot on US equities. We started with 200 of them. Now we have 2,000 of them. And we think we can actually bring the tokenization to a lot more type of assets, including private equity, real estate, arts. And we want all of that to happen on the Robinhood chain, obviously, but also in all the applications that we connect to.
Now, I know you just ran over here. You were on stage with Bullish CEO Tom Farley talking about just this, Robinhood's evolution. For those folks who are watching this program from home who are not able to watch that talk, what are a few insights that came out of that conversation?
Well, I think, Tom is a terrific CEO. I think Bullish has been doing very well. But what we are excited about is really the connection between, the traditional finance and also crypto. And we have an application where we have all these type of asset classes on the app. And so you can easily move between the two. And really, I think a lot of the lesson that we learned from traditional finance, the fact that you cannot trade on weekends, the fact that, it still takes one business day to settle. All of these things show that we need a new world. And we think blockchain is a solution for that.
Now, we're sitting here in Hong Kong. How are you looking at this region? What are the types of conversations you're having when it comes to retail trading, when it comes to developing these products that are going to bring us to the future of finance? Talk to us a little bit about those.
Yeah, Asia is very important for us. We acquired an exchange 9 months ago called Bitstamp that has a license in Singapore. And so we do a lot of work with institutions, family offices, hedge funds in the region. And so our goal for us is to bring a lot of this platform to start using Bitstamp as an exchange, as a source of liquidity and as a platform. And we also acquired 2 companies in Indonesia for crypto and securities trading. So, slowly you will see Robinhood becoming bigger in Asia.
Tell me a little bit more about that acquisition strategy. Why is the region so important to you? I mean, if we broaden out of just the business, what's so interesting about the audience in this region for you to go in and do these acquisitions and bring these products to these people?
Yeah, I think, what we see is that there's a lot of interest for crypto in Asia. So, for example, in Indonesia, there is already 13 million customers trading and holding crypto. And so we think it's a market that we can actually bring a lot of the technology that we built in the US, where we have best-in-class execution. We offer one of the lowest costs in average. And so we think that if we're able to do that also at the scale of this region, we'll be able to be competitive and bring more value to the customer.
All right, Johan, like I've said, we're at Consensus Hong Kong. We are within the walls of the conference. But what are you going to get up to when you leave the showroom floor? Are you going to any of the side events? Are you going to be going to Happy Valley to bet on any horses? What are you getting up to?
Well, I'm actually flying to Indonesia right after this to visit the company we just acquired.
All right. Well, a lot of folks who have been here are taking advantage of the fact that they're in the region and are flying to different countries to have meetings and visit companies that they are partnering with or have acquired. So you're not alone in that. Johan, thank you so much for joining me at the desk. It was a pleasure having this conversation.
Thanks for having me.
All right, that was Johan Kerbrat, Senior VP and GM of Crypto at Robinhood. We're going to take a break. We'll be right back.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Welcome back to CoinDesk Live at Consensus Hong Kong. I'm joined now by Blockspace Media co-founder Will Foxley, who is going to be my co-host for a few segments. One of my favorite people. We're also joined by two of my other favorite people, CoinDesk's Ayon Ashraf and Omkar Gobole. Hello, everyone.
Hey. How's it going?
Glad to be here.
I got a really nice intro. I mean, you should spice them up too. These guys are all-stars.
No, these two are all-stars, and we're going to hear about the all-star team that's been going all around Consensus. Ayon, you were here this morning.
Yes.
You had some goals, some aspirations to talk to people and find out what's going on in the markets. Did you get some answers?
No.
Okay.
And nobody knows.
All right.
Yeah.
Okay, Omkar, you have a chance to redeem Ayon here.
Yeah.
Do you have answers?
No.
No. Okay. Okay. Well, there's still time. We still have a day and a half for our journalists to roam the floor, talk to folks, figure out what's going on in the markets, who's selling, who's not selling. You don't have answers there, but I'm sure you've been talking to people. Talk to me a little bit about the conversations you've been having so far today.
Yeah, I mean, the biggest conversation ties to what happened in the market last week. Like, everybody wants to know the answers, like, why did we fall? Who sold? Who got capitulated? There are rumors about some hedge fund blowing up. So yeah, that's the main thing. And then, but I'll say this: despite all the market swoon and the downtrend, the mood remains still optimistic because there's a lot happening in terms of technology, and that too, connected to the main street and not just the, Wall Street. It's not just about trading, but it's about stable coins being used, to issue traditional instruments like commercial paper and use of stable coins for day-to-day payments and stuff like that. So, these things are not really having directly connected to the market cap. So if you're focused on just market cap, you're going to feel disappointed. If you look beyond that, there's a lot of reasons to be optimistic.
Actually, I have good anecdotes of that. I have talked to 3 people now about this. How's the technology versus market happening, right? Everybody said, market's gonna market. And everyone else who's thinking about the technology, they're gonna continue to do it. In fact, the institutionals, the big guys, the banks, they're taking markets out of the equation. They're going with infrastructure of the technology, which is blockchain, how they tokenize things, and their funds, and how they implement that into their everyday finance.
Market's gonna market.
That's it.
Couldn't have said it better, Ayon. That's really similar to the conversations we've been having here at the desk too. Everyone's really focused on infrastructure building. I think, like I said earlier, Ayon, when you were on the program, finding real problems that people have, that institutions have, and creating solutions for them, not focus so much on price go up. Will, I know you arrived in Hong Kong last night.
I did.
What have you been up to?
A lot of sleeping, honestly.
Okay.
A lot of sleeping. A 16-hour flight from JFK, but we made it in time for an awesome 2-day event here in Hong Kong. Mostly people have been talking about gold for me. You know, I've been circling around. We had a Bitcoin meetup over at the meetup section. They, you know, gracefully gave me the Bitcoin meetup, and I appreciated that from the Consensus folks. And we had some people show up, and they decided not to talk about digital gold, but just talk about gold itself. And I thought that was a little rude, but we got past it. And we
Have you seen how many replica golds out there?
Yeah. It is all over the place.
Yeah, exactly.
There is a company called, was it the Gold Dollar or something, something like that, floating around here.
Yes. Are you talking about that stable coin that's linked to gold?
I'm not sure. I'm not sure what it is.
I think it is a stable coin that's linked to
It
gold.
very well could be.
It's issued by Kyrgyzstan, I think.
But I think it tells you a little bit about the market that Bitcoin is so kicked in the pants right now that we're talking about gold at a crypto conference, that people are talking about tokenizing gold, trading on chain. They're talking about going long gold. I think even this blow up story with the mythical Hong Kong exchange that possibly blew up, or hedge fund that possibly blew up, is tied back to the silver gold trade.
Absolutely.
And so even that narrative of why did Bitcoin go down is because of a different market that's adjacent to it that a lot of people thought would be actually helping Bitcoin go up. If gold is going to go up to 5K an ounce, why is Bitcoin not going up?
Yeah.
We have a weakening dollar. We have strong gold, but we have weakening Bitcoin. It doesn't make a lot of sense. So I hope you guys can get to the bottom of it by tomorrow afternoon.
Yeah, I mean, look, that was a theory up until now. You know, when gold was rallying, everybody said that once the rally stops, the money is going to rotate into crypto. But, you know, that's not happening so far. So let's see what happens.
Yeah.
And I think I brought this up maybe yesterday we were talking, or earlier on the show in Encore. I want to hear your perspective here. Where is retail? I've been hearing folks say that retail's not really interested in alts, not really interested in memes, not even really interested in Bitcoin and Ether anymore. Now that U.S. equities are being tokenized, Asian retail traders are more interested in trading those. Curious to hear what you've been hearing.
Look, it's pretty simple. The answer is, the traditional assets have been delivering so high returns. There's very less incentive to venture out into a space that you don't really understand. When it comes to Bitcoin, it's pretty simple. It's marketed as a digital gold. So people might be tempted to, diversify into it. But if you look beyond Bitcoin, Ethereum, Solana, other stuff, ZK rollups, etc., for retail investors, they don't understand this stuff. And so when they compare the stuff which is out there, which is so complicated, and then they compare it with stocks, the stocks are delivering returns in excess of 10%, 15%. It's a no-brainer that they are going to go to the market that they are understanding. The second reason, I think it's more of a, the price effect. So the 2025 bull market, it didn't really feel like a bull market. It wasn't like 2017 or 2021 when there was frenzied buying of retail. And one of the reasons is because it's an asset which traded at the $100, 100K per piece. How many assets do trade at that price? Very little. So subconsciously, when you look at the price of an asset, it's 100K per piece. You think, you marvel at it. Your eyes roll up, but you say, it's too costly. I'm going to stay away. So that's the reason. One of the reasons why the bull market didn't feel like a bull market. And it's my opinion that as the price comes down, maybe it goes down to 60K or further 50K. Those people who sitting on the fence thinking that this is way too pricier, now they are going to think, okay, this asset went to 100K, was steady there for months. Now it's trading at a 50% discount. I need to go in. So that's when most probably you're going to see a lot of retail coming.
There was an interesting fact that one of my banking buddies told me that, you're talking about that gold, silver trading. The way gold traded, it seemed more institutional, like, central banks, maybe big guys coming in and buying it. But the way silver traded is exactly what, going back to the fact that it was cheaper in terms of dollar amount. Like, you look at a $70 versus $5,000, you want to go, as a retail, you want to go for $70, you want to trade the hell out of it because that's where you're going to make the money and that's where numbers go up, right? And that's why you saw silver go up, what was it? Can't remember, it was 130% and then come down 40%. And it's all the retail trading, which goes back to what is that retail marvels at 100K Bitcoin, but they're going to go for the meme coins.
Well, what's it going to take? What's it going to take to get retail back?
Another part on top of that is just the sheer amount of L1 tokens that are out there. I saw some fact about CoinMarketCap tracks around 25 million different tokens at this point. So if you're retail, there might be more tokens than there are retail participants in some markets. It's just like hard to grok how many tokens you need to buy. If you're a retail enthusiast, do you just buy the top 100? Do you buy the CoinDesk 5 indice or whatnot? Right. What do you purchase? And for a lot of people, I think you purchase Bitcoin, ETH, Solana, and you probably stop there and you're thinking, too many other tokens to purchase. I'm just going to wait on the sidelines. And we've had enough market history at this point with cycles to know that a lot of these names will be rotated out very quickly. Yep. Most retail, if they participated in at least 2 cycles, which a lot of folks have at this point, 2021, 2024, they're probably aware that a lot of these tokens that they purchased last 2 cycles didn't really hold up. We've only had a handful, keep in that top 5. Even something like ADA, Cardano, it's always been in that top 20, top 10. It's had a pretty spectacular decline in the last few weeks, and it's done that both cycles. So there's going to be less of a bid, in my opinion, into something that, yes, it can stay in a top 10, but it's not going to deliver like the outsized returns people are thinking about. So I think it just comes back to Bitcoin. That denomination dollar part is probably a huge part of this. And then I think you also have to look at just like the structure of how like IBIT or a different institutional purchased option is out there. Yeah. And you want to think like, oh, if it's in a portfolio, I can sell that pretty easily in a 401k now. I don't really need to hold on to it if it's going down. So I think we're seeing a little bit of that too.
I think we're also seeing like the mainstream figureheads who retail can relate to, who they recognize. I had Kevin O'Leary on our Markets Outlook show recently. He said he sold all 27 of his crypto positions and is just holding Bitcoin and ETH because he thinks the rest are all garbage. He didn't say garbage. He said something much worse. And so I think there's a lot going on when people are looking for information. They see these folks who they recognize and they hear things like that, and it makes them want to stay on the sidelines.
I do want to say one thing, though, is that I think retail, it's in my opinion, it's anecdotal because I've seen it in my WhatsApp groups, is that they're going for easier trades, which is prediction markets.
I'm so sick and tired of talking about prediction markets.
It is true. It's true. That's that's not true in a factual way, but it's true from what I'm seeing.
This is what I have a question for you guys. I asked a few of our guests this. Prediction market's really hot right now. Everyone's talking about prediction markets, the financialization of everything. You can bet on anything. You could probably spin one up right now, do something on air, make a little bit of money. Do you think they're sustainable? Do you think people really want to hop on a prediction market and bet on every single thing in their day and their lives?
I would say this: as long as the supply of prediction markets was limited, there was excitement. What's happening now is like every other firm is venturing out into that. So it goes back to what Will said about there are too many altcoins to invest into. It's the same thing. The more the number of prediction markets you have, I think eventually it's going to lead to sort of exhaustion. And they'll lose the interest.
But also one part of it, a regulation part of it, because it is still very murky in what's allowed, what's not allowed. For example, I'm from Canada, and you cannot bet on prediction markets, right? In France, you cannot. So that part, once that gets cleared up, or that does not get cleared up, that will dictate where prediction market's going to go.
I think there's an underlying part of prediction markets people aren't thinking about either. It's not just like, hey, I'm going to trade the Super Bowl, or I'm going to trade... No, if Trump is going to do this thing in a speech or whatnot, there's underlying use cases for prediction markets that are a lot more boring and a lot more suitable long term. One thing that we've been seeing is people onboarding for weather contracts. Yes. So if you're a farmer out there and you don't have a way of hedging the growth of your crop over the next year, there could be a prediction market for it this time next year that enables you to go on chain and go on board yourself to an actual market. It's a little bit more intuitive and easier to understand than going to Chicago and finding like a traditional commodities exchange that, frankly, a lot of people don't have the sophistication for. And if you're trying to run your normal business, you're not going to have time to do that. Just a yes/no on Kalshi or Polymarket makes a lot more sense. I do think we see those build up. which maybe that's a little more interesting to you because
No,
it's like
it
a
is.
little more bread and butter.
Yeah,
right?
that's way.
Yeah.
That's a. I love the way that you laid that out and the way you're thinking about it. And it sounds like maybe there's a consolidation of prediction markets in the future, and it becomes something that's embedded into apps we use every day, and it's less of this. A new prediction market popping up everywhere.
I could add something here. Like some of the contracts in prediction markets are really good in a sense that they are democratizing the strategies that are otherwise, only limited to institutions. For example, if you want to bet on volatility, it's very complicated. You need to understand the options and futures and all sorts of dynamics. But if you list a contract on volatility, let's say whether the Bitcoin volatility will go above 100%, yes or no, it simplifies the whole process. So that way it's really helpful. But at the same time, there are some bets out there which is kind of, you bet on what the Bitcoin's price or Dogecoin's price would be over the next 15 minutes. I would say that's sucking away capital from the productive sectors of the market.
Hey, listen, people love to gamble. And if you give them the product that is easy to gamble, they're going to do it.
You know where I'll be gambling tonight? Happy Valley. Are you guys going to be at the racetrack?
The racetrack. I've heard rumors.
Okay. Seems like the three of you are not going to be at Happy Valley.
I might. I don't know.
Anyways.
Depends on the alcohol.
Egon, Aukar, thank you very much for joining and sharing those insights. As always, it is a pleasure having you on the program. We will see you around later. Will, you're sticking right here with us. We are going to take a quick break. When we come back, the mooch is in the building.
The full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Of Goldman Sachs to the White House and now to the front lines of crypto. He's one of the most candid voices in the industry. Joining us now is the founder of Skybridge Capital, a global alternative asset firm, and the founder and chairman of SALT, which partnered with Consensus for our institutional summit this year, Anthony Scaramucci. Welcome back to the show.
Oh, you're starting out nice. You're being very nice to me, Jen.
I am always nice to you.
You are.
Not nice to you at one point?
No, once in a while. During the FTX thing, we were going at it a little bit.
I know, but I feel like we've repaired our relationship.
No, I didn't mind it. I didn't mind it. I had to face the music. It was okay.
You know that journalism cap on, Jen. We love that.
I know you got to do that sometimes.
All good.
Right?
We're still here.
I just mentioned that Consensus partnered with Salt for the Institutional Summit yesterday. It was closed doors, so we didn't get to see what went on there. Can you give us a little bit of a
Listen, first of all, you guys do an amazing job, so congratulations. Congratulations to Tom Farley, the whole team. We hosted alongside of you guys yesterday at the Grand Hyatt it was like a institutional asset allocator, family offices. We had some of the DATs there. We had a lot of big hedge fund managers there. I thought it was a great event. I'd love to do it again. And we're going to Miami next, right? So maybe we'll be able to do something in Miami.
We are going to Miami next.
Yeah, Miami in May, big time. We've got a way bigger convention center there too as well. So I'm really excited for the North American version of Consensus. In terms of people in the room, what was the sentiment? Because we had Omkar and Aon talking a second ago about how institutions are not focused on the markets right now. Markets, not great, but they're really focused on the infrastructure part of this. Did you see that?
Yeah, listen, I mean, the market, we're in a bear market. The question is, how long is the bear market going to last? And you're always going to have that group of naysayers where it's over, and they'll be chanting that to people. But I think we are learning about the demography of crypto, because if you have a currency debasement going on, you would have expected Bitcoin to do much better. But it turns out that 60-year-old people, and I'm over 60, but 60-year-old people have a tendency to buy gold and silver. And guess what? 60-year-old people are running most of the money at these big institutions around the world and the sovereign wealth funds and things like that. And so they left Bitcoin and other assets that we would like, and perhaps younger demographies like. And I think that's the big issue right now. That's the tension in the marketplace. And I predict, like most bear markets, it will end when we least expect it. But the RSI is below 30. The greed index on a 0 to 100 is at a 5 in terms of where it is as it relates to fear. And there were a lot of bearish people in that room yesterday. So I take that as a good sign. Having lived through 9 bear markets, when people are telling me they're bearish, they're typically talking their book, and that means that they're underinvested.
I was just talking about an interview I did recently with Kevin O'Leary. He said he sold 27 of his crypto positions. He's only holding Bitcoin and ETH. Solana came up. I said that you're very bullish on Solana. I know the two of you are friends. He said, you know what he thinks about that. Can you give me a response?
Well, I mean, I don't want to speak for Kevin, but I do love Kevin, and Kevin and I go back a long ways, but I think that's related to the Sam Bankman-Fried stuff. So I think Kevin felt badly burned by Sam. Sam owned a tremendous amount of Solana, and I see it differently. Maybe I'm too short to see the glass anything other than half full. Like when I'm looking at the glass, it looks full to me, and I look at Solana as an engine that powered through the FTX crisis. I think he felt burnt by the whole situation. So it's sort of a hot stove he doesn't want to touch twice.
Well, Solana has had an incredible evolution since the FTX debacle. I think it was trading at $8 at one point. It has really changed the narrative. It has proved that it could stay, it could build.
So we bought it at 22. On it, it was down from like 200 and change. We bought it at 22, and it didn't stop. It kept falling, and we ended up with it at 8. And we looked at each other and said, "All right, we're going to ride this thing to 0." I didn't think it was going to 0, and if you went to Solana Accelerate, you can see why it's not going to 0. And so we held on, and I think they've generally done a good job. Is it down from its high? But remember, the industry got impaired by the Trump coins. People don't like talking about it because they're nervous about the administration, but the truth be told, the Trump coin sucked a lot of liquidity out of that space. And if you really look at the bear market, in my mind, the bear market really started last January. It didn't really impact Bitcoin until October, but go take a look at the coins that are not Bitcoin, or as you guys say, the altcoins. They haven't done well since last January. So to me, that's a positive, because bear markets typically last about 12 to 18 months. So we're more than 2/3 the way through the bear market.
Oh, I like that. 2/3 of the way through.
I love that.
So we're right there, right?
Right there.
Sunrise is almost
only
here.
Good things ahead.
Listen, like the Buddha says, things change, right? It looks miserable right now, but it's going to change.
So for Solana, a lot of the meme coins were created on top of Solana ecosystem. When you're talking to institutions, does that grok with them? Are they thinking about a lot of the meme cycles that can be pretty destructive come from that?
Again, there's different types of people at that level, right? The CTOs look at it and say, well, weirdly, the meme coins have fortified the case to use Solana for real-world assets, because just take a look at the Trump coin activity prior to the inauguration and look at the volume that Solana was handling and look at the transaction speeds on Solana during that big throughput coming through the pipe of Solana. And so weirdly, you would say, well, the meme coin should probably hurt this because meme coins are garbage, et cetera. But if you're a technologist and you're looking at Solana, you're saying, wow, Solana can handle a lot of activity. And it's cheap, it's easy to use, developers find it user-friendly. And I'll channel some, so I've channeled Kevin O'Leary, I'll channel some Anatoly here as well. Solana is built without a lot of innovation. He took the best parts of what he understood about computer programming and cryptographic blockchain and put it in Solana. And so what was he searching for? Speed, durability, very fast finality, and something that a developer could look at and say, this is easy for me to use. And so for all those things, I think Solana has met those tests. And Solana, to me, not being Bitcoin, is an anti-fragile layer one that I think is going to get adopted. I'm not saying it's going to be the only thing that gets adopted, but guys like Larry Fink, don't go by me, go by Tom Farley, go the former president of the New York Stock Exchange. Yeah. That world is changing. And just to really date myself, I was T+5 when I was your age. So if you were with me at Goldman Sachs in 1989, and you bought a security, it went through 7 different agencies before it got to your account, including the Depository Trust Corporation, and it took 5 days. Okay, so you got the trade here, but you didn't see it in your account for a week. Today we're T+1, and you guys know on Solana we could be an hour. We could probably be less than that, but of course you're going to have some regulatory oversight that's going to slow things down.
You mentioned that the Trump meme coins didn't really do much for the industry, but I want to talk about regulation. I was at the Ondo Summit recently. Patrick Witt said he's very optimistic that legislation is going to pass in the United States. Patrick McHenry was there. He said maybe by Memorial Day. Do you think that is possible given the back and forth that's been going on when it comes to ethics?
So I do think it's possible, because I think that when you look at Washington, right? Washington is very different from crypto. It's very different from Wall Street. And I've got my 11-day PhD, so I can tell you how it works. What ends up happening there is there's varied interests. And so you have to measure everybody's interest. You know, on Wall Street, we all like money. In crypto, we all like money, so we know the interest, right? We're all on the green team. But in Washington, there's blue, red, purple teams. There's all different types of stuff. And if you sit down and you just look at everybody's interest, the White House, the industry, the banking community, the Democrats, the Republicans in the House and Senate, they all have a mutuality of interest to get it passed. Now, the bad news for the industry, it's not going to be what we want. Okay, generally we're libertarians and we want to be left alone, and Washington doesn't know how to do that. And the American Banking Association has a lot of draw, a lot of swag with the Congress. And so they're going to push back on some of the competition that the crypto industry wants to give them. And that's Washington. That's the way it works. That's why they say you don't want to see the sausage being made in Washington. You just want the final product, right? It's a nasty process. And so I'll predict that the legislation gets done. It will not be as good as we would like it to be. But I would tell you that progress is more important than perfection. In fact, the enemy of progress is perfection. And I'll just give this quick example, and I did mention it to Tom this morning from the stage. When Gary Gensler was forced, literally by a judge, to approve the cash or spot Bitcoin ETF, he didn't want you to be able to put Bitcoin into it. And so everyone was complaining about it, but we got it done. And now with Paul Atkins, we've been able to make that change. And so that's what we have to hope for with these pieces of legislation that are coming forward, and I think they will pass.
Treasury Secretary Bessent talked about this same issue in front of Congress the other day, and he talked about how he made a kind of sly reference to Coinbase CEO Brian Armstrong and how he's silent behind the scenes, not agreeing with the regulation as it stands. Do you have a message for Brian Armstrong or for anyone else who doesn't seem to think that, doesn't seem to agree with you, that wants perfection beforehand?
First of all, Brian Armstrong doesn't need any messages from me. I think Brian Armstrong's doing pretty well, and I like Brian, and him and I go to a lot of events together. I admire Brian. I admire his position on this. The truth of the matter is, if you look at the reward system that's in place at Coinbase, he could relent on this, and they would just be fine economically in terms of the way the reward system is going to potentially work in this legislation. So I think it's a tribute to Brian that he's a pretty principled guy and he's anchored towards this idea. Now, if I were talking to the banks and I was going to give them advice, I would say, hey guys, this is going to happen whether you like it or not. Okay, you're the taxi cab industry and Uber's coming into town. So you can either fix what's going wrong in the taxi cab industry or Uber's going to eat your lunch. Okay, so for me, it's more advice to the banking executives than to Brian.
Totally.
But I think you're making the point, Brian, relax, get the deal done, and let's move forward. And I think we're generally going to go in that direction, likely before Memorial Day.
You said that you think legislation will pass. It might not be the legislation that we want. Does that mean you think that certain elements are going to be left out?
Yeah, I don't know which ones, but I think the yield thing is going to be a big deal for these banks. They're going to push back very hard. And lobbying works in the Congress. Remember, it's all about the money, guys. Okay, these guys want to get reelected, and so because of Citizens United, they get an unlimited stream of money from large corporations, and they generally do what the large corporations or the large industries, big banks, big pharma, big food want. Now, that's a whole other topic, and we're in sore need of structural reform in the legislative system because of this. But that's what's going to happen. And by the way, we need to accept that, and we need to deal with the world the way it is, not the world that we want it to be. We just have to deal with that and see if we can get the best deal possible. I wouldn't wait till after the midterms because the Republicans like crypto more than the Democrats. And if the Democrats take the House, I think it'll be even slower and a longer and heavier lift.
Just staying within the politics and the midterms, I'm curious your thoughts on Fairshake. They've raised a lot of money. There's a lot of posters on Twitter saying, hey, you can't come after us with crypto. We're down because of the Trump meme coins, might be down because of some of the price action. But Fairshake has raised more than anybody else for the PAC going into midterms. There's a position of strength with that cash. Do you think it's going to hold up going into midterms, or do you think
I do, but don't underestimate the American Banking Association. They've raised a lot of money from the money center banks as well. We're the David in this game, okay? They represent Goliath. So I think Fairshake has done a really good job. I think the Sherrod Brown race, where they took an 18-year veteran who was the head of the Senate Banking Committee, knocked him right out of that seat. And guys, it is very hard to dislodge an incumbent. They generally have a 95% reelection rate because they get all the money behind them, and they have an installed base, and they're able to curry favor with the electorate using the system of the government to get themselves reelected. So you have to really applaud Fairshake what they did. And if you ask me, and I did say this in November of 24, I said, hey, crypto turned this election. Helped Donald Trump become president, helped the Republicans win the House and the Senate. And this is one of the reasons why I think this bill is passing. Yeah. Because if you talk to Gillibrand, you talk to Schumer, Richie Torres, these are people in my state, they're like, I don't want to go up against Fairshake in the midterm elections. We're better off passing a deal and then turning to Fairshake and say, hey, I supported you guys. Lay off me.
Yeah.
Right? And I think that's the message. And again, when I look at the varying interests, Fairshake is a part of it, and they need to be applauded for the work that they've done.
All right, Anthony, we got to wrap up in just a second, but I love a prediction. And you said we're coming up to the end of a
So you didn't like prediction
bear.
market.
I don't like prediction markets, but I love a price prediction.
I get them wrong. You see what happens?
I love a price prediction.
On Twitter, I get all these comments that I get the predictions wrong. I got my last prediction really wrong.
What was your last one?
No, I thought Bitcoin was easily got to 150,000. If you had laid out the macro case, you had laid out everything. I missized the amount of whale selling, and I also, even though I was worried that the Trump meme coins would slow down the regulation, which they did, I still thought they were going to get done in 25, and I got that wrong. And that hurt the market. Yeah. And by the way, listen, guys, you're not dummies. Certain things go on, big trades happen, and then announcements come out. and move markets.
Yes.
And so don't kid yourself. A lot of people in Washington knew that this bill wasn't getting passed, and some of that capitulation took place ahead of the rest of us figuring that out.
Yeah. All right, Anthony, end of 2026.
Yeah.
What's the price of Bitcoin?
Well, I'm gonna stick to the 150.
150.
I'm gonna stick to that. Yeah, because I think this thing will grind higher, and I think once that legislation does pass, it's going to open a floodgate of activity in the money center banks in the United States. And remember, that's the real circulatory system for global capitalism. And so this is a small asset class relative to the other asset classes that it should be compared to.
Anthony, it's always a pleasure having you on the show.
Jen,
Thank you so much for joining us.
So easy on me. Am I all right, Jen? I mean, usually you're like a lot rougher on me. Get in a defensive position.
I feel like our relationship is repairing. You haven't done
never anything wrong with our relationship.
You haven't done anything.
You're a tough journalist. I've had a hatchet in my forehead on this program.
All right, Anthony. We're going to take a quick break. When we come back, Anthony's going to stick with us, and a special guest joins. The breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Guest is a man of many mysteries and even more alpha on paper. He's a former quant analyst at RBS and rates trader at TD Securities, and the man who once managed a $40 billion portfolio as head of global rates at CalPERS. We are now joined by Joy Patak, the Wizard of Soho. Hello.
Hi, how's it going? Thanks for having me, guys.
Yeah, of course. Thanks for being here. How's your consensus been going?
It's been great. Great weather today. I'm happy to be here. A lot of great information, learning a lot, and happy to be chatting with you great guys.
You're going to be on stage talking leverage never died, perps, basis trades, and the return of the degens. Talk to us about what you're gonna talk about. What are some insights that you tell our audience about?
Exactly. I think we're in this new age of leverage, more so than we've ever seen in history, especially in crypto with all the new DEXs that are out. I think there's a lot of knowledge out there that people still need to learn. Everything from risk management to being able to use leverage to advantage. I feel like a lot of times people, kind of don't understand that you can use it in a good way rather than just gambling. And I just want to kind of give that information out, help people, become better traders, and be able to utilize things more than just being a degenerate in crypto.
Anthony, you were at the Institutional Summit yesterday, right? When you think about your institutional partners and you hear the wizard talking about leverage and degens, how do institutions hear this message and take it in? Does he sound like a madman?
Well, first of all, he's a very accomplished guy. He's very successful, so he's definitely not a madman. But I think what you're saying, though, do we have a lot of fuddy-duddies and old-fashioned people in the institutional community? And the short answer to that is yes. So, listen, if you read it was about 2 weeks ago, if you read the article on the tension between Jamie Dimon and Brian Armstrong, about where the world is going and how there's a group of people wanting to hold the world back, of course they're not going to like the Wizard of Soho, or me, for that matter, or Brian. But the truth of the matter is he's going to win, because he sees the future and he sees the efficacy of the technology. And this happens, guys. Listen, do you think that the horse and carriage owners were in love with the horseless carriage and they were like, yeah, let's bring on the horseless carriage? They had no bid, they had no interest in it. Okay, so he's going to be right, and they're going to be pissed off about it.
Tell us about leverage in the ecosystem. So we have the TradFi world where things are a little bit more opaque, and then we have the on-chain world where we can see what's happening at Aave. We can see when people are looping collateral. We can see when things start to fall apart.
Of course.
Over the last few weeks, as we've seen Bitcoin price and a lot of these other assets collapse, where have we seen in the TradFi world some of that leverage be exposed? or have we not? And where on chain have we seen it being exposed?
No, for sure. That's a great point. Me personally, I came from TradFi background, and being able to see that difference, especially like even if you go in crypto, like maybe a couple months back, leverage was not the way it's now, and it wasn't on chain the way it's now. The onset of DEXs, like guys like Hyperliquid, Aster, that have completely changed the game. You've gotten institutional type of leverage and exposure to the regular Tom, Dick, and Harry, right? Something that they didn't have, and you can see all of that. Everybody can see it. For example, when I was on my, at RBS or TD or at CalPERS, whatever positions I took on, what leverage took on, nobody knew. Now I can go put a position on, you see multi-billion-dollar leverage positions out, the entire world sees it. And that's part of decentralization, right? You want to be able to see everything. You want to be able to have everything disseminated clearly, have the, even playing field. And that's where, as Anthony was saying, I feel like if you're not part of that new world and you don't accept it and you don't utilize it, I think that's the most important part. There's so much information out there, so much on-chain analytics out there. If you're not taking that in, and if you're just in that mindset that, no, I'm going to stick to my old ways, I think you're going to get left behind by a lot of people out there.
Just follow up on that. So I think the uninformed mind or the naive mind might think that on-chain analytics gives us the ability to see leverage. So shouldn't there be more tepid risk-taking out there where people aren't going to go leverage long and explode versus TradFi where you can't see everything. You can't see where all the sharks are.
Yeah.
So why are we still hitting these spots where like 1010 we had so much leverage and then explosion, and then this last week we had so much leverage and explosion? If we have on-chain markets, shouldn't we be a little
so
more...
I think I get what you're saying. So I think there's a couple parts to that, right? So I think one is you're giving there's all... In TradFi world, you have people, you're coming in with, there's a path to becoming a trader, for example, right? You have to go through a whole program, you have to understand risk management. Here, you just you could say in a way, you're giving like a young kid a loaded gun, right? You can go and put 100x with all your net worth with no risk management, no guardrails. But there's a learning process in that. There's a process where there's a lot of efficiency that will build up. Right now, we're in a world, which is great. Like if you're a trader or investor, you want markets that are not as efficient. You want people to be able to take this, because you can take the other side and have, you can make money. Remember, zero-sum game, right? End of the day. So yes, it's good and bad. You have situation like 1010 because of it, but also you learn from it. The market grows. The market gets more efficient, less opportunities. But at the same time, it's all part of different building blocks of how leverage is going to, turn more and more efficient. But part of that, there'll be hiccups, and then I think that's part of growth. You saw that in TradFi world. There was, there's the Black Fridays, the Black Mondays, the Black Thursdays. You've seen that historically. You're just seeing that in a much more expedited way in crypto, and that's just the world we live in now.
Anthony, if I can follow up with you there. So from your time on Wall Street, how did you see that replicated? Like, was it similar process over the last 30 or some years of seeing Wall Street change and add new innovations in that make it more clear or less clear where leverage is?
Remember, Wall Street's inclination during crashes is to slow things down. Crypto's inclination is to accelerate things, and so don't underestimate that. And remember, Wall Street, we're going to open the market at 9:30. We're going to close the market at 4 o'clock. Crypto, we're running things 24/7. Mm-hmm. So to me, it's weird to say this as a former TradFi person, but this is a safer market. Mm-hmm. Why is it a safer market? Because if you're a trader and at 9 p.m. on a Sunday, you're out, 9 p.m. on a Saturday, you're out, then you can adjust your brain to that situation. But on Wall Street, it's 4 p.m., the market's closed, and now something bad happens somewhere in the world. You're in a tougher position. You can get out, you find somebody to sell it to, but you don't have a fully liquid market. And remember, when bad things are happening on Wall Street, you've seen pockets of Bitcoin and other big liquid tokens get hit because they don't have any liquidity anywhere else. I'll just make one last point. In 2023, when we had the banking crisis with Silicon Valley Bank, we saw the rise in Bitcoin, and it was really happening over the weekend. So to me, it's a better market. It's a safer market long term, despite the fact that it looks so volatile today.
That is a great point. Like, especially, you couldn't hedge yourself, in TradFi. Like, I was a bond trader. And
he's called the Wizard. See, he said it was a great
Wizard,
point.
there you go.
Keep it up. What else were you saying? Keep going.
No, that's great. No, I'm just saying, like, it's great that you can hedge yourself in this market. You couldn't do that. Like, if I was on the bond desk and I had a position that I put on Friday, there's no way I can get out of it. The world could be ending.
So you won't put the position on?
Yeah.
See what he just said? So he's not going to put that position on because he can't get out if there's an exogenous risk that happens.
Yeah.
And we're in a world right now where there's a lot of anticipation of exogenous risk.
On the flip side, though, it's a less liquid market, and we have, over the weekends, historically, more ups and downs of Bitcoin price on those Fridays, right?
You're right,
so,
for now.
So where do you see that sort of part of the industry growing? Does this require more participants? Does it require more infrastructure?
More liquidity, more participants, clarity. That's why they call it the Clarity Act. You have more regulatory clarity. There'll be better guidelines, and banks will be entered a space.
Yeah.
We will be winning, to use a Charlie Sheen word on this program, we will be winning when you can custody your Bitcoin at a money center bank and even possibly get yield from that bank off of your Bitcoin.
All right, we're going to leave it there. Maybe #winning will be trending on X later.
The Wizard of Winning.
Later today. There we go. We got the Wizard of Winning at the desk. Thank you both for joining us. We hope you enjoy the rest of your time at Consensus.
Thank you.
Good to be here with you guys.
Thank you so much.
That was Skybridge Capital founder and Salt founder and chairman Anthony Scaramucci and Joy Patak, the Wizard of Soho. We are going to take a quick break. We'll be right back.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Welcome back to CoinDesk Live. Our next guest joins from Hex Trust, which offers fully regulated institutional digital asset market services, custody and staking to builders, investors, and service providers. Please welcome Chief Product Officer and Head of Custody, Georgia Pellizzari. Georgia, pleasure to have you on the show.
Thanks for having me.
Yeah, of course. Okay, we've been talking a lot about institutional adoption today. We've been looking forward, hearing some predictions about 2026. But let's look backwards first before we go forwards. Talk to us about the biggest catalyst from your perspective in 2025 when it came to institutional adoption.
Yeah, absolutely. I think 2025 was definitely the year of Bitcoin. So let's with that. So in 2025, we've seen new primitives being launched. Namely, I think the most famous was Babylon Protocol. That actually was the first one that natively, in a primitive way, offered yield on BTC. That really kicked off a really interesting catalyst for institutions, because obviously what typically Bitcoin is a very lazy asset. It just sits and doesn't do anything. And suddenly new ways of actually making useful and usable have come into play. Now, obviously that also came with some question mark around the yield. How sustainable is it? Is it actually something interesting for institutions? And so that was, I would say, definitely the initial one. Then we've had a lot of prep work, in my view, towards what we're going to be seeing in 2026, which, in my view, is extremely exciting, despite the red in the market, which is obviously, sad to wake up to. But also, after you're in crypto, you know that that's cyclic, right? So you're going to have downturns, and you need to keep pushing through. And especially in the institutional space, RWA tokenization, I think that's something that 2025 was a lot of build time, and we'll see the results this year. So I'm actually very, very excited, despite the bumpy first months of the year. But we have plans such as, for example, DTCC tokenizing by mid-year. Hundreds of billions of dollars, right? And they're going to do it in a specific chain. We're going to, a name that probably many have heard so far in the market. But we're actually seeing that sort of manifestation of what people have been talking about actually since 2019. I've been in the space for almost 10 years. 2019 is when people started talking about STOs, security token offerings, which is really tokenization of RWAs. It's just another way of calling it. Obviously, nothing manifested back then, but now I think we're seeing not only tooling, infrastructure, the right market participants, the right service providers such as ourselves with the right licenses, regulators coming in and addressing the gaps in the market slowly and maybe in a fragmented way, but we're getting there. So yeah, I would say that sum is up.
Nasdaq and NYSE made some news earlier last month when they announced that there's some projects that were actually going to start being greenlit into moving into tokenized stocks. How did you guys see that front run, so to speak, here in East Asia, where a lot of these projects have already started quite a while ago? Have you seen that on the infrastructure side or on the exchange side or where else?
Absolutely. Definitely infrastructure side, exchange side. Liquidity is definitely coming. We see that. There is a lot of cautious as well, because still we're talking about monumental changes in the way finance has been run from the beginning of time. There was a really interesting tweet by the CEO of Coinbase stating US markets are actually open only 19% of the time. 19%. In extended hours, 48% of the time. Imagine, and I think the gentleman were talking about it earlier, imagine when the market actually is 24/7. I think we still do not foresee exactly what that will look like in the day-to-day operations. But so I think, the Asia is preparing for it. I would say on the Western side, definitely more attention to ETPs, ETFs, I would say, whereas here it's a lot more about infrastructure, and we're definitely seeing movement there.
I know back in December, Hex Trust announced that it's going to issue custody-wrapped XRP, expanding XRP DeFi utility across lots of blockchains. Talk to us about the demand for this product. What were institutions asking for, and what's this going to solve?
Absolutely, absolutely. I'm going to have to go a little bit technical because it's not really obvious what wrapping is and what WXRP is versus XRP. But blockchains are all different. XRP is one of the very OGs, I would say, in the space. It's not built XRPL natively for smart contract interaction or the ability to interact with DeFi applications. So what we do, we are basically taking in as collateral native XRP assets. We're holding in regulated custody, and we issue against it a one-to-one representation that, however, lives in different blockchains. So if you say Solana is the thriving ecosystem for DeFi, and you say, I want to borrow against my XRP, how are you going to do it? Well, you need a representation of that XRP that lives on Solana, and that can basically interact with DeFi application on Solana, against which you can borrow US dollar, run a basis trade. Right, so basically we are the official, basically Ripple-backed issuer. We are now issued on HyperEVM, Ethereum, Optimism, Solana, and we have a roadmap for 2026. And very, very important, WXRP also functions as a sort of integral product with RLUSD, which is a stable coin by Ripple.
In terms of this year, what pieces are still missing to make RWAs or tokenized stocks big? What, if you could have one thing, wave magic wand coming out of Consensus, it happens and things start really sparking up, what would you say it is?
I think still secondary market. So I think from a distribution perspective, it's still clunky, I would say. So we are in active conversations with some, in my view, really, really exciting tokenization commodities such as, for example, nickel wire. If you imagine you want exposure to nickel wire, there is some organization tokenizing it, and now we're waiting for the regulator to approve the exchange to list that asset. Right, so I think we still have a lot of comfort that regulators need to find in order to allow for all the participants in the full flow of funds to be there effectively. Because I would say infrastructure is there. We have the blockchains. We have the custody. Still, I think the connection between the regulator and all the different other participants.
All right, Georgia, we have to go. But before we let you go, I want to hear about your Consensus Hong Kong experience. HexTrust obviously sponsored our desk. As you're walking around the floor here, what kinds of conversations are you having? What are you hearing?
I would say high quality crowd. I would say still a confirmation that institutional digital asset use cases are really the focus for 2026. 2025, you had, the Mona, you had like still kind of more retail focused launches. I think this year we're not hearing much about it, but rather you're hearing all those guys that are speaking to banks and actually actively paving the way for that real RWA tokenization element. Security. I'm having quite a few healthy conversations about security, and now we make sure that big hacks like that happened in 2025 are not going to happen again. And that goes back to the right rails, the right service providers, security certification, et cetera. So good conversation so far.
Georgia, thanks so much for joining us at the desk, and thank you for being a Consensus partner.
Thank you.
That was Georgia Pellizzari, HexTrust Chief Product Officer and Head of Custody. We're going to take a quick break. When we come back, Sam Ewan gives me a break and takes over the lead chair. Stick around.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience that percenter.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
and welcome back to CoinDesk Live at Consensus, presented by Hex Trust, the leader in digital asset solutions. If you're just tuning in now, you are live from the floor at Consensus Hong Kong. I'm Sam Ewan with Jen Sanasi, Will Foxley, and Martin Assam. So, guys, how is the day going so far?
Swimmingly.
Having the best birthday ever.
The best birthday ever. Oh, it's your birthday? We didn't know.
I've told her 3 times today.
Martin.
Yes, sir.
First time on the desk. Welcome.
Yep. Honored to be here. Thank you.
Yeah. Martin, this is your first time also at Consensus Hong Kong.
That's true.
Give us your sense of what you're seeing. Martin runs our social accounts here, and I assume you've been around the floor, seeing what's catching people's attention, what's trending. Give us your takedown.
Yeah, well, as you know, there's about 11,000 odd people in attendance here, and we've also got the same number of people watching online, so that's a 22,000 crowd strong if you want to include the digital realm. Walking around, the energy is really strong, really high, not really reflecting the market right now, but I think that just shows that the show that we're putting on here is something special and something that people really want to be a part of, so it's great to see.
What have you been seeing that's caught your eye that maybe that you put on the Consensus account?
I'm not sure if this is a positive, but it seems like a robot takeover. I don't know about you guys, but I'm seeing them absolutely everywhere. So that is maybe a sign of the times, or maybe where we are. In terms of Hong Kong, it's pretty out there in terms of the cutting edge of technology. So I can see that this being a place where we might see more robots in the near future.
Well, what's your takeaway on sort of the vibes that are happening on the show floor right now?
You know, it's hard to walk around here. So that was sort of my surprise. There's just a lot of people, which is great. Like, you're just kind of like shuffling through, and there's just like a wall of people coming through. There's like, I saw someone from a high up government official. I had no idea who it was because I'm not from Hong Kong, but you know, them getting pushed through with a bunch of security officers around them. And it's cool to see that during what a lot of people in our last segment, right, a bear market, typically at these sort of events, it's like a little more quiet because the coin prices are down. That's not this. That's not Hong Kong. It's been difficult to walk around because there's so much going on there. You have to stop every few minutes, take a look at the booths. You have to kind of wait your turn for people to walk past. And that is a great thing to see during a conference. And then it's also really good to see for us bag holders who are really hoping that more bag holders come into the market and prices rise a little bit. So that's my takeaway, Sam.
Also, Will, you focus a lot on Bitcoin. You focus a lot on mining. We have a couple of mining shops around who have some amazing booths. What do you think about just the conversation around mining in Asia these days, considering what happened in China a few years ago?
Yeah, no, I think like the mining story in Asia itself is still there. Maybe not as interesting to some people, but I think it should be on the forefront of people's minds because miners sit at the intersection of two things, two very important commodities. That is digital assets and then silicon. Not too far away from here, Taiwan has TSMC, and then they're manufacturing all these very important silicon chips. Bitcoin miners are purchasers of those chips. You go north to Korea, Samsung manufactures a lot of these chips as well. And then here in China, there's also a lot of manufacturing of silicon. China itself has about 20% plus or minus a little bit of the Bitcoin mining footprint. We don't think about that because we think about 2021 and the Bitcoin mining ban, and we think it's at 0%, but it's not. It's around 20%. That is a large foothold on the Bitcoin mining network. And I think that over the next few years, we'll actually see that increase since there is only growing power generation and silicon development within China. So there is still a story to be told about Bitcoin mining in China. It's not going away. I think Hong Kong as sort of like a nexus or a hub for digital assets is a place that you'd see a lot of Bitcoin miners also congregate to in terms of buying and selling those assets.
Put that into perspective for us, Will, because you said 20% of the Bitcoin mining happens over in China. Then we hear the administration in the United States say that it wants to become like, the Bitcoin mining capital of the world along with the crypto capital of the world. Well, put that into perspective. What is that statistic really, what does that mean as we move forward?
I mean, there's a few ways you could break it down. I think the easiest is the United States is about 30 to 35% of Bitcoin mining globally happens in the United States. Of that, I'd say about 50% happens in Texas, right? So there's a huge portion of Bitcoin mining in the US. China used to dominate that, used to be 40+%. And then a lot of those Bitcoin miners chose to move to the United States because that was the next best place with good rule of law and cheap energy markets. In China, you have both those things, but during 2021, you had the rule of law change against Bitcoin miners, so they decided to move. there's other ways that we could talk about it in terms about the aggregate number of machines or the energy footprint. I think when you start looking about those numbers, like, what is a terawatt hour per year? Most people can't think about that. I think maybe a way to consider it is there is enough Bitcoin mining happening in China that could power a few large cities in the US. That's how much industrial footprint there is for Bitcoin mining still in China. In terms of the number of people, it still employs a few thousand people. Bitmain still operates a lot of stuff in China. It still operates a lot of its HQ in China, and then outside of it in Indonesia, Malay, elsewhere. So it's still pretty sizable, Jen. I don't know how else to get more of a focused number. It's just
that was great.
Some of these numbers are so big.
Yeah, no, that was great. I think.
All right, guys. Well, we also have our Consensus mascot here. I'm not going to pretend to know the name, but
you could name it.
The mascot just called for a special graphic on the screen. Let's see what graphic this mascot. Oh, happy birthday!
Oh my gosh,
Jen.
that's my dog.
With your dog.
I adopted
And
that dog.
also
from
proof of calories just entered.
Yeah.
Wow. So
Guys.
send you off on your birthday after a hard day's work. This is about the clap. And we know we'll see you out the show floor, but we want to really appreciate all the work that you've done. Thank you, Martin. Thank you, Jen. We're going to keep going. We'll be right back after a quick break.
It's a nice looking cake.
How you know? The breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right, welcome back to Consensus Live from Consensus Hong Kong. The markets are on edge. Everyone is asking what's next. Joining us to break down the data is Marcus Thielen, founder and CEO of 10x Research, known for his pinpoint accuracy and institutional-grade analysis. Marcus is here to tell us if this is just a dip or a deeper trend. Marcus, welcome.
Yeah, thanks for having me.
All right, we all have to ask. The last weeks have been kind of crazy in crypto. Some people were blaming actually this region for some of the challenge that was going on. What's your take of what's happened over the last couple of weeks?
Yeah, of course there's a long story and a short story, right? I think the sort of medium story is that since the summer we have seen a lot of the OG wallets selling, but the ETFs were still buying, and that has really reversed sort of end of last year. But what also happened is actually a lot of the crypto hedge funds were underwater really in Q4, and that usually means within a 1 month to 3 months lag, you're going to see a lot of redemptions. And of course, these hedge funds need to liquidate some positions to kind of, fulfill those redemptions. And that's when we have seen the Coinbase premium, so where Bitcoin trades on Coinbase basically in negative, so in discount really. So we can see a lot of institutional investors who are selling relative to global investors. That was how we really came into the new year. But then really beginning of this year, we expected that the ETFs would start reaccumulating again because investors have new money really to deploy, but that didn't really happen. So ETFs had 2 days of inflows and then bang, outflows again. And I think that really brought the imbalance really again to the negative side. And then towards the end of kind of January, we had actually better U.S. economic data. The ISM manufacturing survey came out, above 50, so in expansion for the second time only in the last 3 years. And that's when people started to reprice actually growth expectations in the US. And that means less rate cuts. And when you look, the last two times when the Fed unexpectedly cut, usually in September 2024 and 2025, Bitcoin had a big push up. But with stronger economic data, that means less rate cuts. And then, similar time period, the probability that Kevin Warsh would be named as a, new Fed chair, really shot up, and it was confirmed. But that's when we started to sell off, at the 87,000 level. And the 87,000 level was a very big, important level for trend funds. So the trend signal turned negative, and then basically there was a new downtrend in place. And what was really, really crucial, and I think a lot of people actually have not, noticed this, that when Trump was elected in November 2024, Bitcoin ramped up from 70,000 to 90,000 within like 10, 12 days. So there was very little trading activity happening. So there was a big gap, a big liquidity gap. So when Bitcoin went to 87,000, it fell into the liquidity trap. And then what happened is that at 75,000, there was a lot of negative option gamma happening. So the market makers, they need to hedge themselves and just sell futures and futures and futures with the last negative gamma hitting at 60,000. So it's almost like, okay, the last market maker is hedged, now we can reverse. So that's what we did. And then our expectation is, and sorry for going on so long, right? But I think that's where we kind of, go to. Yeah. We expected kind of Bitcoin stay above 70,000 for around 3 weeks, but we think we might actually go now lower and take out the low because there's no real, buying happening. And usually when you see these, cascading liquidations, it's not the end of the downtrend, it's actually the beginning of a downtrend, right? Because as a trader, you're really naturally long, and when you lose money, it's not that you suddenly say, oh, let me put more money into crypto. It's rather the opposite. I need to find a level to get out. And so that's kind of the scenario where we're in right now.
So you're expecting this summer to trade at 40 to 50K. You've also said in December that with midterms, typically you see a correction of over 60% in some cases. Is that still kind of the thesis for why we're going to that 40 to 50K, or is it more about that liquidity gap and that spot where we need to get back to for a base?
Yeah, so last time, I spoke with Jennifer was on, I think, November 12th, where we laid out sort of this scenario of a 60% correction, which sounded pretty, crazy, right? And, CoinDesk put it on Twitter, which had, of course, a lot of great comments, from people. But we dropped really, 58%, so far already. So I think the scenario is actually very much in place, because when you look at what happened during the last bull cycle, we also had this kind of second, wave higher up in this ABC correction. So we think we're still in this B wave right now, which turns into a C wave. And our view is more that probably during the soccer FIFA World Cup, we might be bottoming out then. I think the earliest episode is probably April. And I really think we're going to go to 50,000. I do think there's a possibility that Kevin Warsh comes out and is actually, at least through his nomination hearings, that he's more dovish because he's not going to be hawkish, right? The market ran with the hawkish story, and we wrote a report in December that he's going to be, perceived as hawkish, at least initially, until he really comes out. But he's not going to rock the boat now until he's really confirmed, right? So, but I think then he's going to come out and he's going to be dovish, and maybe then we're going to rebound. But I think the probability is still high that we're going to go to this 50,000, because I think people are still relatively long. And to address a little bit the rumors about some Asian fund, of course we had a fund in mind, but based on our cross-channel checks, it's not that fund. And we don't think it's a single entity, because when we look at, for example, Hyperliquid, right? Hyperliquid had huge volumes on October 10th. And Hyperliquid accounted, to around 53% of all the liquidations. So it's not just one entity got liquidated on October 10th. It's more like the broader market. And we had a similar scenario last week where, on Hyperliquid, trading volumes went from 5 billion to 28 billion. So a lot of people got liquidated there again. So it's not one entity. It's more the broader market. So I don't buy this a multi-strategy fund. I mean, I used to work at Millennium, which is, a big multi-strategy fund. Nobody is short puts there, right? Especially not in Bitcoin, right? It's really a hedged position. So that's not how the market works, and that's why I think it's not one entity. That's why we also have not heard from one specific entity being, going under in October 10th, because it was spread among many entities, and that's why we had this like negative feedback loop, right, where redemptions and so on. So it's really unfortunately where we look at how ETFs, they have bought around 54 billion US dollars in Bitcoin with an average price of 90,000. So they are like underwater by 10 billion roundabout, right? Yeah. 11, 12 billion. But when you look where Bitcoin is versus when the ETF started, they are literally 30 billion too long right now, right? So that's still, I think, a lot of head scratching, where people maybe need to adjust positions. So I think that is still the risk that those people might unwind versus the crypto native, they already liquidated a large part. So that's is the risk for the summer.
All right. Fascinating stuff. Marcus, thank you so much. Yeah. That was Marcus Thielen, CEO of 10X Research. Let's turn now to social media, see what some attendees are saying about Consensus Hong Kong.
Yeah, all right.
All right, first up, just waiting on a graphic here.
Well, we can look at some numbers as well.
We can look at some numbers. Yeah, why don't you give us some numbers?
Over
here?
10,000 participants.
I heard 11,000 this morning.
11,000, even higher. With 116 different countries attending. Oh, here's our first graphic.
We have our first social graphic. Yes, there's been a lot of robots sitting around. Some of them seem tired after the fights that they had. But if you're at Consensus, you are certainly going to run into one of these autonomous beings. So make sure you keep an eye on that. Let's check the next.
One's slumped. It's completely tired.
KuCoin here, really celebrating the fact that we have now, like I said, almost 11,000 people on the show floor. A lot of them focusing on the institutional opportunities, especially around Hong Kong. So what we've seen out there is a lot of great conversations. Hopefully some great partnerships come out of it. And then finally, we would remiss and not mention that we have a companion event happening at the same time with Solana Accelerate, which has been really just popping over there. A lot of activity, a lot of energy, a lot of excitement. So thanks to Solana for being partners of ours on this. And now we are going to go to Adam Kai. Adam, welcome to the desk.
Thank you for having me.
Adam is the CEO of Virgo.com, a platform that aims to make crypto trading safe, easy, and affordable. Adam, welcome.
Thank you. Thank you for having me.
How's your Consensus going?
Amazing. I think this is probably the best blockchain conference. I think it's very impressive. A lot of good handshakes.
Glad to hear it. Yeah, we were here last year and we had about 9,000 people, so it's good to see that attendance has grown. A lot more energy in the room, so I appreciate that. Tell us a little bit about what Virgo is working on right now.
Sure. So Virgo started off as a Canadian trading platform, which is kind of boring, and then we kind of really focused on the two global business lines since 2024. One is Virgo Pay, global stablecoin on-ramp offering providers that aims to really make the cross-border remittances seamless, cost-effective to enable the business. And the second business is Wallet V, which is a strong DeFi ecosystem builders. It's an AI-empowered wallet trying to lower the entry barriers. So this is also a very cool, very Web3 native product. Both of them have been getting a lot of tractions, and now we focus a lot on the global expansion.
Last year, Virgo CX added a non-custodial part of its business. Can you tell me a little bit about how the customers are looking for that non-custodial solution? At the same time, they want all the other gadgets and Wismos, like they want to be seamless, trade across train, go across borders. How do you put the non-custodial feature into the product?
That's a good question. I think I'm seeing the crypto users now becoming a lot more educated and knowing how to use different types of products in the Web3. So really, as a on-ramp, off-ramp exchange, people are there to convert to different crypto stablecoins. But in the end, they want to have more fun with it, right? They want to get access to the DeFi. They want to be able to do different payments. So once we convert to that, I'm seeing a lot of people already trying to make that move to a wallet, and they're trying to connect that with Virgo Pay, have the ability to now transfer over 26 countries, and with a seamless user experiences over certain currencies. So that does give people that benefit of Canada as a major tie to different part of the world.
When you mentioned Virgo Pay, we've spoken to a lot of companies over the last year who are focused on remittances, stablecoin payments, and one of the larger challenges was around off-ramps. How do we get money in people's hands? Is that friction still there, or has that problem been solved?
Sure, and I think that's what I have been doing in the past 5 years. We're really good at maintaining strong payment rails, banking relationships, And we're seeing that there are a lot of now cheaper solutions, which really doesn't need you to be paying like 3-5%. Like you get really low and it gets you directly to a bank account. You don't have to worry about being flagged by banks. Really strong KYCs, AML done properly. So Virgo Pay is building on that level of KYC AMLs. So when people receive money from us, they know it's from proper banking, proper rails. They can have their money rest assured, don't have to worry about anything else. They can just directly get their money into their traditional financial institutions. Yeah.
Do you think, though, just to follow up on that, at some point I keep wondering when we're going to enter that moment where if, Will and I are exchanging a service and a good for dollars, we're sending each other a stable coin, we're not actually thinking about ever converting it back to actual fiat. How close are we to the point when these native digital currencies just really are economies of their own?
That's a good question. I think for the Web3 users, 100%, stablecoin, to have stablecoin at their hand is a lot more powerful and for their usage. But I think for Virgo Pay, I want to be clear on that. The true vision is for me to help the Web2 users. So they don't really need to understand what is stablecoins. All they want to do is to move money from developing nations to developing nations seamlessly. That can beat their traditional, speed, and it can make it cheaper, reliable, and in the end, they want to make sure their logistics flow with the, the money flow, do that, really freely. I think that is trying to bring more adoption to stablecoin rather than just get people a token to speculate. And I think our Virgo Pay is focused on that part of business. Really a B2B, B2C model, helping the business to do the remittance easier. And that tie, I think, is something we're really excited about. And we talk with a lot of international trading companies. They're equally excited to see that happening.
Yeah, you've talked to us a little bit about the B2C side. We talked to the B2B. When you're looking for partner banks or on-ramps, off-ramps, what are you guys looking for, and how has been the reception over the last 2 years as stablecoins have ballooned in market cap?
Yeah, I think the banks now, of course, knows stablecoins, crypto a lot better. They're well allocated, so they also, of course, care about the governance, right? How do you do everything KYC, ML? Do you have audit done every single 1 or 2 years? How do you address the KYT? That part is the basics. I think the banks are well familiar with that, but I also think there are a lot of customers still looking for more advanced features from the banking side, such as virtual account, send them in and out, because there's still a lot of people when they see it's coming from trading platforms, payment networks, they want to close the account, right? So that friction is still there, unfortunately. I think there's still more education telling banks, they are good providers. We have really worked hard trying to keep the industry safe, turning away the bad actors. But banks still need a lot more educations, even in US or Canada. But I'm seeing that being a little bit better. I'm seeing good banks, attending seminars very often, learning industry. The trend is good.
Is there any concern about what it really means to give self-custody to these individuals? I'm interested in sort of the idea, that you guys have built a non-custodial solution right now, especially when we're thinking about the idea of payments on a micro level. I'm worried about just how the everyday user already has so much challenge in the financial system. What happens when we have to teach them all of this new technology, or does that just get hidden?
Thank you for asking that question. I think your comment is extremely right. So the entry barrier for the Web3 wallet or non-custodial is very, very, very high. So that's exactly why we enabled the AI agent actually right in Consensus, right? It's just live 2 days ago. I think the goal there in the future is when you speak with AI, when you type with AI, they can do actions based on intention. For example, I want to swap. They're going to tell you, do you have gas fees? And what do you need to do? I think that guidance needs to be there. And the AI is the best customer service rep to hold customer hands, to tell them what's the risk, what they should watch out, and how should they do it. In the end, I'm hoping that in the future, people don't have to learn all different chains, USDC on 10 different chains, EVMs, all that stuff. AI will just tell them and able to do that for them in a few simple words. And I think that's exactly what we do. And I think that's extremely important. In the end of the day, adoption is the key, right? Whether they know how to use it is the key, right?
All right, Adam, pleasure to see you. That was Virgo CEO, Adam Kai.
Thank you
We'll
so
be
much.
right back.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
And welcome back to CoinDesk Live from Consensus Hong Kong, brought to you by Hex Trust. Joining us now is the co-founder and general partner at Maximum Frequency Ventures, Mo Sheikh. Hey, Mo.
Hey, how's it going?
Great, good to have you here. What's your take on Consensus Hong Kong so far?
I mean, the energy has been unbelievable, especially given where the markets are. I'm incredibly impressed with everyone that showed up. And obviously, you know, the show has been phenomenal. So great work.
Thank you. Yeah. You know, you launched a $50 million fund to invest in crypto projects in October. What are you looking for in what makes a great project for you to invest in?
Yeah, I mean, the name kind of implies it, right? Like, we're looking for people that can hit their maximum frequency, and we've been fortunate to find amazing investors that have that capability. But in sort of these next, this next chapter of crypto, we believe founders need to have an incredible level of depth of their respective industries and categories, and not just crypto. And so we're looking for those founders that really have that and helping them accelerate going forward. The second component for us is, you know, after being founders, we understand the importance of East and West. We have two general partners in Asia, one in Singapore, one in Hong Kong, and myself, Alex and Jerome, and myself and Neil are based in the US in New York and Austin. So, you know, we have great global coverage, and we're looking to bridge between the East and West on that category too.
For your first point there, I want to talk a little bit about who you're looking for, a founder's mindset. It's not just crypto anymore. Like, you have to know everything. We've seen crypto and AI have a lot of coverage, talk about that. Seen a lot of the AI infrastructure, have conversations here. When you're talking about these crypto founders you want to invest in, tell me a little bit more about like some of the characteristics or the interests that you're seeing on that's like, hey, this is a good indicator or a green flag for me to deploy a check to them.
Yeah. So I think there's kind of two things to unpack there. One is, do you have industry knowledge and can build a product for that industry and incorporate crypto in the right way? Historically, what we've seen is the opposite. We've seen, hey, here's crypto, it's this really cool primitive. I'm going to brute force this thing into like this industry and disrupt it. Obviously, that hasn't worked. And so the point you raised around AI, among many other technologies that are sort of converging, we're seeing new form factors come to life. The way you interact, the way you use the internet is evolving. And as a function of that, the products and industries that exist within, you know, the internet will evolve as well. We've seen that with, you know, things like pets.com to like where we are today. So we look for founders that have that depth. The second, and you guys kind of see this, is like, can a founder really go through the resiliency of being in a crypto market? It's hard. Like, being in crypto, especially if you have a token, like, you are a public market founder immediately, and you have, you know, all these stakeholders to manage. And so they pull you in different directions. So when you're pulled in all those directions, you're often compromising your product. So we look for founders that have this resiliency component, but also this depth of focus and know what matters most, not just token price.
Mo, there was, 11 million tokens launched last year. Most of them go to zero. What's your guidance or advice to these founders to say, hey, maybe you gotta hold off on the token until you really have something, or you like, get the money, get the money?
It's an excellent point. It's hard to not be. It's easy to be simple and say, don't launch a token until your users value the product. And I think that is partially right.
No, for sure. That's a great point. You know, me personally, you know, I came from TradFi background, and being able to see that difference, especially, obviously, like, if you go in crypto, like, maybe a couple months back, leverage was not the way it's now, and it wasn't on-chain the way it's now. The onset of DEXs, like today, guys like Hyperliquid, Aster, that have completely changed the game. You've gotten institutional type of leverage and exposure to the regular Tom, Dick, and Harry, right? Something that they didn't have, and you can see all of that. Everybody's able to see it. For example, when I was on my, at RBS or TD or at CalPERS, whatever positions that on leverage took on, nobody knew. Now I can put a position on, you see multi-billion-dollar leverage positions on, the entire world sees it. And that's part of decentralization, right? You want to be able to see everything. You want to be able to have everything disseminated clearly, have the even playing field. And that's where, as Anthony was saying, I feel like if you're not part of that new world and you don't accept it and you don't utilize it, I think that's the most important part. There's so much information out there, so much on-chain analytics out there. If you're not taking that in and you're just in that mindset that, no, I'm going to stick to my own ways, I think you're going to get left behind by a lot of people out there.
Just follow up on that. So I think the uninformed mind or the naive mind might think that on-chain analytics gives us the ability to see leverage.
Maybe on the tokenomics side or about the timing, the cap table that you would do differently versus 21
out there where people aren't going to go leverage long and explode versus TradFi where you can't see everything. You can't see where all the sharks are. So why are we still hitting these spots where like 10-10 we had so much leverage and then explosion, and then this last week we had so much leverage and explosion? If we have on-chain markets, shouldn't we?
So I think I get what you're saying. So I think there's a couple parts to that, right? So I think one is
in order to do that,
you're giving
some sort of mental preparedness.
In TradFi world, you have people you're coming in. There's a path to becoming a trader, for example, right? You have to go through the whole program. You have to understand risk management. Here, you just kind of you can say in a way you're giving like a young kid a loaded gun, right? You can go and put 100x with all your network with no risk management, no guardrails. But there's a learning process in that. There's a process where there's a lot of efficiency that will build up. Right now we're in a world which is great. Like if you're a trader or investor, you want the markets that are not as efficient. You want people to be able to take this because you can take the other side and have, you can make money. Remember, zero-sum game, right? End of the day. So yes, it's good and bad. You have situation like 10-10 because of it, but also you learn from it. The market grows, the market gets more efficient, less opportunities. But at the same time,
AI, I think of longevity.
It's all part of different building blocks of how leverage is going to turn more and more efficient.
How much are you saying?
Okay, there might not be crypto, but it's still you saw that in TradFi world. There was there's the Black Fridays, the Black Mondays, the Black Thursdays. You've seen that historically. You're just seeing that in a much more expedited way in crypto, and that's just the world we live in now.
Anthony, if I can follow up with you there. So from your time on Wall Street, how did you see that replicated? Was it similar process over the last 30 or some years of seeing Wall Street change and add new innovations and then make it more clear, less clear where leverage is?
Wall Street's inclination during crashes is to slow things down. Crypto's inclination is to accelerate things, and so don't underestimate that. And remember, Wall Street, we're going to open the market at 9:30, we're going to close the market at 4 o'clock. Crypto, we're running things 24/7. So to me, it's weird to say this as a former TradFi person, but this is a safer market. Why is it a safer market? Because if you're a trader and you know at 9 p.m. on a Sunday you're out, 9 p.m. on a Saturday you're out, then you can adjust your brain to that situation. But on Wall Street, it's 4 p.m., the market's closed, and now something bad happens somewhere in the world.
We'll be right back.
You're in a tougher position. You can get out, you find somebody to sell it to, but you don't have a fully liquid market. Remember, when bad things are happening on Wall Street, you've seen pockets of Bitcoin and other big liquid tokens get hit because they don't have any liquidity anywhere else. I'll just make one last point. In 2023, when we had the banking crisis with Silicon Valley Bank, we saw the rise in Bitcoin, and it was really happening over the weekend. So to me, it's a better market, it's a safer market long term, despite the fact that it looks so volatile today.
That is a great point. Like, especially, you couldn't hedge yourself, in TradFi. Like, I was a bond trader, and
he's called the Wizard. So he said it was great.
Wizard, there you go.
Keep it up. What else were you saying? Keep going.
No, that's great. No, I'm just saying, it's great that you can hedge yourself in this market. You couldn't do that. If I was on the bond desk and I had a position that I put on Friday, there's no way I can get out of it. The world could be ending.
So you won't put the position on.
Yeah.
See what he just said? So he's not going to put that position on because he can't get out.
Yeah.
If there's an exogenous risk that happens. Yeah. We're in a world right now where there's a lot of anticipation of exogenous risk.
Here on the floor at
On the flip
Consensus
side,
Hong Kong,
though,
I'm
it's a
Sam
less
Ewan,
liquid
alongside
market,
Will
and we
Foxley.
have over
Joining
the
us right
weekends
now,
historically
Jason Atkins, Chief
more
Commercial
ups and
Officer
downs of
at the
Bitcoin
global
trading
trading
on
firm
those
and
Fridays,
liquidity
right?
provider
For now.
Oros.
So
Jason,
where do you
great
see
to see you again.
that sort of part of the industry growing? Does this require
thank you
more
for being a part of
participants?
the
Does it
Consensus now,
require
second year in a
more
row.
infrastructure,
It's been
more
really wonderful
liquidity,
having you
more
guys here.
participants?
What's your sense of the
clarity?
show, the vibes,
That's why they
the
call it
feeling
the
around
Clarity
Hong Kong
Act.
specifically?
You have more regulatory
it's
clarity. There'll be better guidelines, and there'll be banks will be
a lot
under
of
the
anxiety
space.
from a lot of people about this year because
we will be winning.
honestly, it's
To use a Charlie Sheen word on this program, we will be winning when you can custody your Bitcoin at a money center bank and even possibly get yield from that bank off of your Bitcoin.
Very close part of my heart. I've been
All right,
here
we're going to leave it there. Maybe hashtag winning will be trending on X later.
The Wizard of Winning.
There we go. We got the Wizard of Winning at the desk. Thank you
Jason,
both
your
for
panel
joining us.
today
We hope you enjoy the rest of your time at
Market
Consensus.
Makers
Thank you. Good to be here with you guys. Thank you so much.
That was Skybridge Capital founder and Salt founder and chairman Anthony Scaramucci and Joy Patak, the Wizard of Soho.
To flip the script a little bit, if you look at a recent event, October the 10th, where a lot of market dislocation and volatility happened, a lot of people took away from that market makers caused it, market makers are evil. The reality is, if you look at that event, it exposed what happens if market makers were not
Miami.
What a lot of we know for sure, in fact, finance has said and announced it, is that things broke. The APIs broke, and overuse of the exchange in such volatility led to market makers being unable to perform the duty that we do for the market. And if you take a step back from the actual price action and think about
markets
that,
right
it
to your
shows
phone,
that if we're not
track your
there
favorite token
doing what we do
and
best,
dive deep
things
into
would
the
be very,
latest
very
data.
difficult and very, very
Download the
different. And
CoinDesk
I mentioned this on
today.
stage, but we've been grappling with the path to institutional adoption for so long. That path becomes a lot harder if your volatility goes from 70, 80, 90 to 200 volatility again. And liquidity is absent. Pension funds, hedge funds, venture capital firms, liquid funds, they will not be able to touch this asset if it's going to do what it did on 10/10 every single day. So to me, the takeaway from volatility events like that is market makers are an essential part of the lifeblood of this. And embracing and understanding why they do what they do and how they work and why they're important is a good thing for all participants of every size to know and understand. Because then they can lean into the liquidity and appreciate it for what it provides.
So when I'm looking at that question that Sam gave you and then your answer there, I'm thinking like what is missing? So if the market makers weren't able to connect because of the API issues and then we had such volatility going forward, what can we fix to make that not happen again? What can we do to prevent such like catastrophic volatility? Which I would note is like a history and a picture of Bitcoin's price.
Welcome back to CoinDesk Live. Our next
you try
guest
to plan
joins
for
from Hex
historical
Trust,
events
which
and
offers
you
fully
look at what
regulated
has happened in the
institutional
past and
digital
build
asset market
according to that.
services, custody and
There's always
staking to
black swan
builders,
events that
investors,
occur.
and
You try
service
to
providers.
predict and
Please welcome
analyze
Chief
what they
Product
could
Officer
be.
and Head of
It's partially
Custody,
on firms
Georgia
like us to build the
Pellizzari.
systems
Georgia,
to make
pleasure
sure
to
they're
have you on the
robust.
show.
Thanks for having But it's
me.
also on
Yeah, of course.
exchanges
Okay,
to
we've been
partner
talking a
with
lot about
market makers,
institutional
to take feedback
adoption
on
today.
board,
We've been
to listen to
looking
what we say
forward,
about
hearing
do
some
it this way,
predictions
do it
about
that way.
2026.
Sometimes
But let's
it's
look
self-serving,
backwards
but
first
most of the
before we go
time,
forward.
we're trying
Talk
to
to
get
us
to the
about the
point where
biggest
we can do
catalyst
what
from
we
your
do best.
perspective
Not
in
in a
2025 when it
altruistic,
came
we
to
just want to
institutional
provide liquidity.
adoption.
Yeah, absolutely. I think
It's
2025
because
was
very active
definitely the year of
trading
Bitcoin.
provides
So let's
all
with
market
that.
participants
So in
with better
2025, we've
environments
seen
to
new
trade in.
primitives being
Tighter
launched.
spreads, deeper books, stable
Namely, I
markets,
think the
more
most famous was
investable asset
Babylon Protocol. That actually was the
Jason, I
first
wanna
one
pull
that
on something you
natively,
said
in a
earlier,
primitive
which
way,
was
offered
that
yield on BTC.
the
That really
health and
kicked off
liquidity in the
a
DEXs
really
seem to hold up a lot better
interesting
than in the centralized
catalyst for
exchanges
institutions
during these
because
big
obviously
volatile events.
what typically
Tell us a little bit more
Bitcoin is a
about
very
how-
lazy
how does a
asset.
centralized
It just sits and
exchange
doesn't do
manage
anything.
that, and how
And
can they work with
suddenly
you guys?
new ways of
Yeah, so
actually making
centralized
useful and
exchange,
usable
obviously, by
and
the
come
name is a
into
centralized
play.
group that's building
Now, obviously,
and
that also
runs
came
their
with some
systems
question mark
independently
around
at
the
their own
yield. How
discretion.
sustainable is
These
it?
centralized
Is it
exchanges
actually
have seen
something
explosive
interesting for
growth,
institutions?
especially in the recent
And
months. The perp
so
narrative
that
is
was,
back.
I would say,
Seen things
definitely
like
the
hyperliquid
initial
scale
one. Then
at
we've
hyperpace,
had a
which
lot
is
of
a
prep
terrible
work,
pun,
in
but
my view, towards what we're going to be seeing in 2026, which in my view is extremely exciting, despite the red in the market, which is obviously sad to wake up to. But also after you're in crypto, you know that that's cyclic, right? So you're going to have downturns and you need to keep pushing through. And especially in the institutional space, RWA tokenization. I think that's something that 2025 was a lot of build time, and we'll see the results this year. So I'm actually very, very excited, despite the the bumpy first months of the year. But we have plans such as, for example, DTCC tokenizing by mid-year the hundreds of billions of dollars, right? They're going to do it in a specific chain. We're going to, a name that probably many have heard so far in the market. But we're actually seeing that sort of manifestation of what people have been talking about actually since 2019. I've been in the space for almost 10 years. 2019 is when people started talking about STOs, security token offerings, which is really tokenization of RWAs. It's just another way of calling it. Obviously, nothing manifested back then, but now I think we're seeing not only tooling, infrastructure, the right market participants, the right service providers such as ourselves with the right licenses, regulators coming in and addressing the gaps in the market slowly and maybe in a fragmented way, but we're getting there. So yeah, I would say that sum is up.
Tell us a little bit about building in Hong Kong.
NASDAQ and how your firm has been expanding here.
Earlier last month
employees or
so
are in Hong Kong.
Where do you see Hong Kong being in the center of not only crypto but
stocks?
How did you guys see that front run, so to speak, here in East Asia, where all these projects have already started quite a while ago? Have you seen that on the infrastructure side, on the exchange side, or where else?
Absolutely. Definitely infrastructure side, exchange side. Liquidity is definitely coming. We see that. There is a lot of cautions as well, because still we're talking about monumental changes in the way finance has been run from the beginning of time. There was a really interesting tweet by the CEO of Coinbase stating US markets are actually open only 19% of the time. 19%. In extended hours, 48% of the time. Imagine, and I think the gentleman were talking about it earlier, imagine when the market actually is 24/7. I think we still do not foresee exactly what they will look like in the day-to-day operations. But so I think the Asia is preparing for it. I would say on the Western side, definitely more attention to ETPs, ETFs, I would say, whereas here it's a lot more about infrastructure, and we're definitely seeing movement there.
I know back in December, Hex Trust announced that it's going to issue custody wrap XRP, expanding XRP DeFi utility across lots of blockchains. Talk to us about the demand for this product. What were institutions asking for, and what's this going to solve?
Absolutely.
I hope to be here for a long time.
I'm going to have to go a little bit technical because it's not really obvious what wrapping is and what WXRP is versus XRP.
Jason, we'll have to wrap it up there. Thank you as always for stopping
blockchains are all
by.
different. XRP is one of the very OGs, I would say, in the space.
Jason Atkins.
We'll be right back. They build XRP natively for smart contract interaction or the ability to interact with DeFi applications. So what we do, we are basically taking in as collateral native XRP assets. We hold it in regulated custody, and we issue against it a one-to-one representation that, however, lives in different blockchains. So if you say Solana is the thriving ecosystem for DeFi, and you say, I want to borrow against my XRP, how are you going to do it? Well, you need a representation of that XRP that lives on Solana, and that can basically interact with DeFi application on Solana, against which you cannot borrow US dollar, run a basis trade.
Get the breaking
news. So basically,
we
are the official Ripple-backed issuer. We are now issued on Hyper-VM, Ethereum, Optimism, Solana, and we have a roadmap for
to CoinDesk Live from Consensus Hong Kong.
And very important, WXRP also functions as
our next two guests have some answers for us. Joining us now is co-founder and CEO of 9gag, Ray Chan, and Bonk core contributor Nam Bong.
In terms of
Ray and Nam,
this year, what pieces are still missing to make RWAs and tokenized stocks big? If you could have one thing, wave magic wand coming out of Consensus, it
back then, the
happens,
meme coin
and things start
meta
really
hadn't
sparking
happened
up.
yet.
What would you say to
About
this?
a year ago? It
It's
was
still
just really building.
Secondary
And we saw a
market, so I
crazy year
think from a
in meme
distribution
coins. So,
perspective.
do you think that was just a flash in the
It's still
pan,
clunky,
or are we
I
going to
would
start to
say.
see more
So
meme
we are
coin
in
cycles come
active
back?
conversations with some, in my view, really exciting tokenization. Commodities such as, for example, nickel wire. If you imagine you want exposure to nickel wire, there is some organization tokenizing it, and now we're waiting for the regulator
right? So I would say that's far from that, right? But there are always like ups and downs. There are always sometimes they get more attention, sometimes they miss attention.
A lot of comfort
I think you
regulators
run into the situation where if you look at the broad market sector in they're alive and well and they're continuing to do what they've done since people first started experimenting with a lot of these different areas, whether it's colored coins or whether it's the different areas of building these out. They're a very interesting and exciting way for people.
All right, George, so we have to go, but before we let you go, I want to hear about your Consensus Hong Kong experience. HexTrust obviously sponsored our desk. As you're walking around the floor here, what kinds of conversations are you having? What are you hearing?
Are individual meme coins dead? Probably. That is an unfortunate situation, but these are much closer to crypto startups than I think a lot of people give them credit for, where the point of teams iterate rapidly and organize things. The best memes, I think, either have very strong community or very strong technical support and ideas behind them, where they're going to be able to continue to get people very excited and pushing forward with their new initiatives. Outside of that, I think the sector is going to continue to grow, and the secondary effects of that sector, which is trading infrastructure, all things that I think a lot of teams look at in DeFi, will continue to accelerate, and that's where you're going to see the additional benefits.
We had Anthony Scaramucci sitting there about 2 hours ago, and we talked about the effect of meme coins on Solana and how institutions viewed an investment in Solana. And for him, his standpoint is, hey, if a meme coin can have huge volume on this chain, why can't a stock? Why can't RWA?
That was George Pellizzari, HexTrust Chief Product Officer and Head of Custody. We're going to take a quick break. When we come back, Sam Ewan gives me a break and takes over the lead there. Stick around.
Conclusion. That being said, a lot of other institutions might not come around to what you guys are saying, or even what Anthony Scaramucci is saying. How do you guys kind of talk to the institutional investors out there that might have an interest in meme coins, or is that just completely different sides of the room, no intersection at all?
I think Ray also has a lot of experience in terms of what he's been working on for strategy. And what I've been working on the professional and institutional side of Bonk and the NKK as a public company is there is a certain level of these memes where people are interested in not only trading volatility, but also the value of the underlying community or products that are a part of these areas. When you talk about pure meme coins in terms of this idea of just a speculative group where you believe that a lot of people are going to go up or down. We have meme stocks as something that people are trading very, very heavily. I think GameStop's probably most famous to them. Tesla was for quite a long period of time, and I think you can look at the recent rise in precious metals, right, as also a meme, right, as something, a frenzy where people are getting very excited and trading these things very heavily. Does that mean that institutions, family offices are all going to be buying the next meme? Maybe not, but the idea still goes into the fact that, again, these are useful, these are community metrics for liquidity tests for interest in a certain area, or for bug testing layer one in various strong areas. The best meme becomes something that is more than just a token or more than just a community. They become businesses, and I'm sure that as Ray has more experience than anyone can tell you the power of what a meme can do and how you can make financial systems from that.
I think 10 years ago, if you said that, institutional would buy into Bitcoin, right? People would say that, hey, you're dreaming. But right now, a lot of them, they actually buy Bitcoin. I don't see why they wouldn't buy meme coin in one day. And to be honest, right, to me, I feel like because of Nike, right, I feel like meme coin, they're all cultural IPs, right? If people understand the value of culture, right, they will understand the value of meme coins and other meme-related like stocks or other assets. I believe that the last 10 years, right, meme is just content, right? But in the coming 10 years, I think meme will become like assets.
The thing I keep struggling with, I think, Ray, you and I talked about this last year, and it just sticks with me, is that memes are a truly, beautiful thing in humanity, right? They just, express some feeling we have, whether it's a cartoon dog saying something or, a kid having an explosion in a car, whatever it is, it makes me feel something. The minute we start putting a dollar figure behind that, it changes the very nature of the meme. And I think about the ways that, music sort of culture propagates, fashion culture propagates, and even though there is financialization, it's not at the forefront. Meme stocks seemed like, with the exception of a Pepe or a Doge or a couple of these tokens out there, that it was, let me capture attention right now. The people who really know how to play the game kind of buy it on the way up, and everyone else buys it on the way down and loses money. And it kind of with CoinDesk Live at Consensus, presented by HexTrust, the leader in digital asset solutions. If you're just tuning in now, you are live from the floor at Consensus Hong Kong. I'm Sam Ewan, with Jen Shanassi, Will Foxley, and Martin Assam. So, guys, how is the day going so far?
As a meme coin,
swimmingly.
Having the best birthday ever.
But just like Amazon, right? It's
best birthday ever. It's your birthday, we didn't know. I've told her 3 times today.
It's like a marketplace or anything, right? I mean,
Martin,
even like
yes, sir.
First
time on the desk.
Robots,
Yep, honest to be here, thank you. Yeah.
I feel like a lot of people.
Martin, this is your first time also at Consensus Hong Kong. That's true. Give us your sense of what you're seeing. Martin runs our social accounts here, and I assume you've been around the floor, seeing what's catching people's attention, what's trending. Give us your takedown.
Yeah, well, as you know, there's about 11,000 people in attendance here, and we've also got the same number of people watching online, so that's a 22,000 crowd strong if you want to include the digital realm. Walking around, the energy is really strong, really high, not really reflecting the market right now, but I think that just shows that the show that we're putting on here is something special and something that people really want to be a part of. So it's great to see.
What have you been seeing that's caught your eye that maybe that you put on the Consensus account?
I'm not sure if this is a positive, but it seems like a robot takeover. I don't know about you guys, but I'm seeing them absolutely everywhere. So that is maybe a sign of the times, or maybe where we are. In terms of Hong Kong, it's pretty
at this time last year, right? We were talking through the idea of
I can see that it's being a place where we might see more robots in the near future.
What does it mean for a token to be listed as a security versus a commodity or something?
What's your takeaway on sort of the vibes that are happening on the show floor right now?
In the United States, but in other jurisdictions, of
it's hard to walk around here. So that was sort of my surprise.
A token is not equity inside of a company, but it can act as pseudo equity.
Like you're just kind of like shuffling through, and there's like a wall of people coming through. There's like I saw someone from a high up government official. I had no idea who it was because I'm not from Hong Kong, but them getting pushed through with a bunch of security officers around them. And it's cool to see that during what a lot of people in our last segment, right, a bear market, typically at these sort of events, it's like a little more quiet because the coin prices are down. That's not this. That's not Hong Kong. It's been difficult to walk around because there's so much going on here. You have to stop every few minutes, take a look at the booths. You have to kind of wait your turn for people to walk past. And that is a great thing to see during a conference. And then it's also really good to see for us bag holders who are really hoping that more bag holders come into the market. Prices rise a little bit. So that's my takeaway.
I have the answer to any of those.
Also, Will, you focus a lot on Bitcoin. You focus a lot on mining. We have a couple mining shops around who have some amazing booths.
Only tokens that are.
What do you think about just the conversation around mining in Asia these days, considering what happened in China a few years ago?
I think like the mining story in Asia itself is still there. Maybe not as interesting to some people, but I think it should be on the forefront of people's minds because miners sit at the intersection of two things, two very important commodities, that is digital assets and then silicon. Not too far away from here in Taiwan is TSMC, and then they're manufacturing all these very important silicon chips. Bitcoin miners are purchasers of those chips. To go north to Korea, Samsung manufactures a lot of these chips as well. And then here in China, there's also a lot of manufacturing of silicon. China itself has about 20% plus or minus a little bit of the Bitcoin mining footprint.
It was traded very similar to a
because we think about 2021 and the Bitcoin mining ban, and we think it's at 0%, but it's not 20%. That is a large foothold on the Bitcoin mining network. And I think that over the next few years, we'll actually see that increase, since there is only growing power generation and silicon development within China. So there is still a story to be told about Bitcoin mining in China. It's not going away. I think Hong Kong as sort of like a nexus or a hub for digital assets is a place that you'd see a lot of Bitcoin miners also congregate to in terms of buying and selling those assets.
Thank you.
Put that into perspective for us, Will, because you said 20% of the Bitcoin mining happens over in China. Then we hear the administration in the United States say that it wants to become like the Bitcoin mining capital of the world, along with the crypto capital of the world. Well, put that into perspective. What is that statistic? What does that mean as we move forward?
There's a few ways you can break it down. I think the easiest is the United States is about 30 to 35% of Bitcoin mining globally happens in the United States. Of that, I'd say about 50% happens in Texas, right? So there's a huge portion of Bitcoin mining in the U.S. China used to dominate that, used to be 40
thank you
plus
once again
percent.
to our
And then a lot of those Bitcoin miners chose to move to the United States because that was the next best place with
hundreds
good
of
rule of
billions
law
in TVL,
and cheap energy markets. In China, you have both those things, but during 2021, you had the rule of law change against Bitcoin miners, so they
Under
decided to
Joseph
move.
Lubin's leadership
There's other ways that we could talk
leading
about
the
it in terms of the
charge with
aggregate number of
MetaMask
machines or the energy
integrations,
footprint. I
giving
think when you
users
start looking about those
seamless
numbers, like
self-custodial
what is a
access to both
terawatt hour
crypto
per year?
and legacy
Most people can't think about that.
assets.
I think
Today's last
maybe a
session dives
way to
into how
consider it
these
is
hybrid
there is
systems
enough
are
Bitcoin
transforming
mining
finance
happening
forever.
in China that
Please
could power
welcome
a few
Joseph
large
Lubin and
cities
Elaine
in the
Yu.
U.S. That's how much industrial footprint there is for Bitcoin mining still in China. In terms of the number of people, I mean, still employs a few thousand people. Bitmain still operates a lot of stuff in China. It still operates a lot of its HQ in China, and then outside of it in Indonesia, Malay, elsewhere. So it's still pretty sizable, Jen. I don't know how else to get
Hello,
more
everyone.
of a focused number. It's just,
I'm
That was
with
great.
some of these numbers are so big.
And
Yeah.
joining me today
was
is a
great.
very
All right, guys.
special
Well,
guest.
we also
Joe
have our
Lubin, CEO
consensus
of
mascot here.
Consensus.
I'm not going
So
to
today we're
pretend
going
to know
talk
the name.
about the title is
oh wait,
how
you can name it.
DeFi becomes
This,
Fi. And
the mascot just called for a
it's been
special
big
graphic on
theme
the
last
screen.
year, and it'll be a big
Let's
theme
see what
going into
graphic
the
this
year.
mascot.
And I just want to
happy
start by
birthday,
having a conversation
That's
with
my
the
dog.
market
With
these
your
days, right?
dog.
We're seeing
I
a
adopted
lot
And
that dog
also
from-
proof of
And I wanna
calories
ask
just entered.
about how all of that in the market.
So
Guys.
send you off on your birthday after a hard day's work.
Folks
This is what the club.
approach the space.
And we know we'll see you on the show floor, but we want to really appreciate all the work that you've done. Thank you, Martin. Thank you, Jen. We're going to keep going. We'll be right back after a quick break.
At the end of a roughly 80-year monetary and generational super cycle, and the world is collapsing. The system of the world no longer serves the people of the world well, and we have a new super cycle revving up in the form of decentralized protocols and AI, and the financial understand that the
really appreciate all the work that you've done. Thank you, Martin. Thank you, Jen. We're going to keep going. We'll be right back.
Clearstream, whether it's major stock exchanges, whether it's regulators. Finally, in the United States, the regulators are embracing crypto. ETFs.
And we know we'll see you on the show floor, but we want to really appreciate all the work that you've done. Thank you, Martin. Thank you, Jen. We're going to keep going. We'll be right back after a quick break.
That can actually at the end of roughly 80 years loss of trust in centralized systems, whether they're government or financial, large financial institutions. The volatility has, not at all slowed into the cycle trad by embracing the AI.
It's interesting to see the price movement becoming a bit more divorced from the technology layer. And I guess with things like stablecoin, right? The draw of that is that, right. So
whether
any
it's major
concerns
stock
though that
exchanges,
you're hearing
whether it's regulators,
from the mainstream
finally in the United
players,
States, the
or are they
regulators
just
are embracing
moving full
crypto.
steam ahead?
I think they're moving full steam ahead.
We know we'll see you on the show floor, but we want to really appreciate all the work that you've done. Thank you, Martin. Thank you, Jen. We're going to keep going.
And that's
We'll be
why
right back
they
after
lined
a
up
quick
on
break.
the actually the Biden administration and Gary Gensler's SEC back in the previous regime. But they've also, some of them have been chomping at the bit at the opportunities that are available in the decentralized protocol space with DeFi, with stablecoins, etc. They just want to make sure that their business isn't too disruptive. So banks don't want stablecoins, as many of us have heard, to be issuing yield to retail consumers because they are concerned that will lead to a loss of depository assets. So the banks have their own version of stablecoin, tokenized deposits, and I think there can be so many different tiers of money, from the highest powered money, which I think of as decentralized money, like Ethereum, and then gold is the central bank money, and tokenized deposits.
deposits are going to be much more regulated. They're going to move much less freely. And I think the real innovation is probably going to happen in the stablecoin space, where less regulated and much more able to be utilized by companies, so white labeling stablecoins potentially, and we'll see a lot of innovations being attached to a stablecoin. So I could, my company could white label a stablecoin, and then I could add all sorts of programmatic perks to that. And that will lead to a lot.
And I also wanted to ask for specific examples as well, because we've seen years of pilot, prototyping, experiments, and some blockchain projects have moved into production now. But is there an example you can cite of a open blockchain or DeFi application that moved mainstream, and why do you think that succeeded where others
that moved mainstream? So I have a really good example. It might be self-serving, but I work at a company called Consensus. We publish a wallet called MetaMask, and MetaMask started nearly at the beginning of the advent of the Ethereum ecosystem, and it was really a way to sign transactions. It was your digital authority, where you can sign a message, you can sign a transaction, then something can happen. You can send a token from one place to another, or later on you could participate in DeFi or DAOs or NFTs. That evolved to becoming a wallet, as most people think of MetaMask, and then a portfolio management tool. But now, following on the neobank panel that we just had, MetaMask is a new kind of neobank. It's a neobank that we can all own and control. It's a neobank that we can have in our pocket, on our phone, or run on our laptop, and you can access hyper-liquid perps and equity perps and prediction markets from Polymarket and tokenized securities currently from Ondo Finance, but there'll be lots more issuers of tokenized securities. We have a debit card, like some of our colleagues that just left the stage. Our debit card is special in the sense that instead of putting your salary in your bank account so you can use your debit card and have your bank earn interest on your money, you can actually put it in an account. You can put it in a vault and earn money in yield, essentially, on your own Ether or on your own stable coins. And right up to the minute that you buy something on the MasterCard network, your money is working for you, and then a little bit of it is moved. And just it's a revolutionary way to give more power, more agency, financial agency to people. We have a few other features. We've got our own stablecoin, and we have a rewards program. So MetaMask is the largest self-custodial wallet in the world. So over 100 million people use it on an annual basis, and that makes MetaMask very attractive to lots of innovative protocols, to innovative layer ones who can be rewarded via our rewards platform with tokens or with points. So it is changing the nature of banking.
Speaking of yield, there's a big debate in the U.S. about, what stable coins, how it should reward customers. Of course, customers want these yields, but, the banks are worried about financial stability. How do you think it should be regulated on that front when it comes to rewards from stable coins?
Well, as an employee of a company that has a stable coin, we like the idea of being able to share as much value with our users as possible. It is their money, it is their neobanks, effectively. I do understand the perspective of financial institutions. I kind of disagree with financial institutions. I think they're probably not going to see much of a loss of deposits just because stable coins exist. I would argue that when stable coins get really prevalent, there'll be much more financial activity. When decentralized trust replaces centralized trust, we're going to have just so much more economic activity, so much more velocity in the economy, and that is going to manifest as deposits in banks. Not to mention that these stable coins, the Genius compliant stable coins or stable coins issued in Hong Kong, which have very similar structures, they all require $1 in the bank or treasuries in the bank for every stable coin they issue. So I kind of believe that the banks want their cake and to eat it too, because they will retain their deposits and they will retain larger deposits, I think.
So what is the main hurdle then stopping DeFi from overtaking traditional finance? Is it barriers in the tech itself? Is it market demand? Whether these products can reach commercial scale? Is it regulation, the incumbents? What are the main hurdles?
Yeah, so I believe that, first of all, DeFi isn't going to overtake TradFi. I believe that TradFi and DeFi are going to merge, and that TradFi is going to bring 200 years of innovation, and there's a lot of innovation that has happened in the last couple centuries in the financial system. They're going to bring some of that as forcing factors to DeFi to help it mature, but decentralized trust and much faster rails and tokenizations of real-world assets and money, it's just it's going to be a revelation to anybody who sees it in DeFi. So DeFi is now roughly as safe as traditional finance is, and so that's maybe a controversial statement, but the blue chip DeFi protocols are very safe. Bank accounts and money, which is being debased around the world, are growing increasingly less safe. So if you have various nation-state currencies debasing, if you have situations like in the GFC where you saw haircuts in various nation-states where you wake up in the morning in Greece, for instance, and you've lost, I forget, 25% of your purchasing power. So we're moving, at the end of the super cycle, we're moving into a much more dangerous period in the traditional finance system. If you compare a debasing and increasingly unstable financial system with a financial system that has grown by orders of magnitude since the advent of Bitcoin and since the advent of Ethereum, people now have the option of investing their money in a vault in DeFi and earn, call it 4% or 6% or something like that, on top of the money that's been increasing in value. It's certainly volatile now, but if you squint your eyes and you plot the price of Bitcoin or Ether on a semi-log graph, since the start it's been going pretty much up and to the right quite smoothly. So smart people in DeFi recognize that. In the U.S., if we get some legislative clarity so that financial institutions, so that enterprises can put their money into higher yielding platforms, can lend and borrow, I think the floodgates in terms of the use of DeFi by institutions are about to open. Better and better to make itself more and more accessible and usable, and so I think 2026 we're probably going to see a real breakthrough in the use of DeFi.
And what's the prospect of the U.S. Clarity Act? We're talking about U.S. regulations that can help usher this forward. They're facing delays now. Yeah, what do you think? How do you think that will move in the coming months?
It's been even more volatile than the markets. So I am not a legal expert. I talk to lots of legal experts and policy people. The most recent statement that I heard was that it's looking like there will be some concessions on both sides of a couple of different issues. There's still the issue of whether legislators or politicians can actually participate in either equity
investments or token investments, but it sounds, as of this afternoon, it sounds like this could be worked out in the next month or two. But don't, that is not financial advice.
Got it. And I want to talk about Ethereum. So, in the past, Wall Street firms, banks, they have been wary of public blockchains, but we've really seen them heavily adopt the Ethereum network, layer 2 especially, and with EVM compatible blockchains. So Ethereum is emerging as that settlement layer globally, increasingly, with Wall Street firms, coming into the fray. There are obvious benefits to having a unified settlement layer, say on Ethereum, and there are competitors too, perhaps Solana, others. Are there any risks to relying on a single chain?
Relying on a single chain. So it depends which chain it is, I think. Bitcoin was formed a long time ago, and it was a special period in which Bitcoin had the ability to innovate and favor rigorous decentralization and create this this new kind of trust, decentralized trust, the most powerful trust known to humanity. And so it established itself as decentralized money, or certain aspects of money. Ethereum took this invention of decentralized trust, and because it was built by software developers, it built a platform for software developers to build anything they wanted on decentralized trust. And Ethereum was also formed at a special point in time where we had the luxury of a bunch of years to keep building and scaling and making it affordable and usable, all while doing the hard thing, which was keeping it rigorously decentralized, because that's where you get decentralized trust from, and some side effects of that are credible neutrality and censorship resistance. So when we have been speaking to traditional finance organizations, whether they're deep infrastructure in the money space or in the security space, we find that we're on the same team. We find that they want the most trustworthy systems. We find that they want the kind of modularity that can separate different kinds of functionality so that they don't break together, or so that there aren't conflicts of interest, separations of concerns, essentially. And so if you look at the era of private permissioned blockchain, a huge amount of that work has been done in the last few years on Hyperledger Besu, which is an Ethereum client. It's an Ethereum client that our company Consensus contributed to the Linux Foundation. And so whether it's DTCC or Citibank or just so many financial institutions, not just in the US but around the world, they all already use Ethereum. But in a private permission context. And so now that they've been given permission, or are being given permission, in the process of being given permission by regulators to move on to public blockchain and benefit from issuing real-world assets on a rigorously decentralized platform like Ethereum, or participating in stablecoins and DeFi, etc., they are not uniformly, but dominantly choosing Ethereum technology. So we have a layer 2 zero-knowledge EVM technology called Linea, which is 100% bytecode compatible with Ethereum, but it's also being structured as the enterprise Ethereum blockchain, or layer 2 blockchain. And so if you're one of those financial institutions and you want your own settlement layer, or you're providing infrastructure to the rest of the financial industry, you're already working with Ethereum technology in-house. And so Linea is actually built on and around Besu, and so the natural choice is to build on Linea or other layer 2s in Ethereum, and many banks are actually focusing on layer 1 as well. That's a probably the best place to issue valuable real-world assets. And then move some of the activity up to layer 2s. But the natural choice is to set up shop for your consortium or for your institution on a layer 2 ZK EVM that gets the full security guarantee from layer 1 and enables you to bridge to anything and access any sort of DeFi or any sort of tokens in the Ethereum space.
Yeah, and of course I should add, before I ask this, that you're a co-founder of Ethereum. A lot of people will know you by that.
A little bit biased towards Ethereum, yes.
But yeah, with Ethereum, I mean, there's been no talk about quantum risk, things like that. Are there emerging tech risks that people should be prepared for?
I've read a lot about quantum risk recently, and we've been talking about that in the Ethereum space for a long time because we were all aware that it was coming. It was always 20 years away, and it may still be 20 years away, but then this AI thing happened, this ability to bring machine intelligence to different disciplines, whether they're scientific disciplines or technological disciplines, and maybe create some sort of boom magic event that suddenly cures cancer or suddenly makes cheap nuclear power rapidly available, or enables quantum computers to become relevant much sooner than many people think. So there are lots of really smart people that think it is still 15, 20 years away. There are lots of smart people who think it might be as soon as 5 years away. So let's call it 8 to 10. And Ethereum is not perfectly ready right now, but a bunch of the components are already being made quantum safe. Signatures are moving from a vulnerable technology to a hash-based technology, which will be invulnerable. So Ethereum will be just fine within 2 or 3 years. Other blockchain systems will be just fine because there are solutions. And the only concern is Bitcoin, actually. So Bitcoin, Satoshi Nakamoto, whoever they are, please come back and upgrade your accounts because otherwise some quantum technology company is going to be able to come along and for each one of the addresses that hold 50 Bitcoins that Satoshi mined, they will be able to crack that code and move those tokens and potentially end up with quite a bounty. So it's a complicated, perhaps existential threat for Bitcoin. And it'll only affect certain kinds of addresses, but it's a large percentage of the addresses.
And yeah, something looming. But also just turning to the subject of AI as well. How are you using AI in your work?
So I use it all day, every day. Every time I need to do something that requires some information, some analysis, I generally use Gemini. It's very strong. There are other great tools that I use as well. Internally, we built our customer success database so that customers can interact with it as a first layer, and it is could call it beloved. It's very well received, and if necessary, it passes our customers off to humans, and they're also very well received. So we have a truly great customer support system. We have a lot of software developers who are making use of Claude and other systems to help them write software. And we have this phenomenon going on right now that you're probably all aware of, where Claude bot emerged in morphed into Moltbots, morphed into OpenClaw, and so there's this tremendous innovation where people are setting up either one agent or swarms of agents, and giving those agents personas so that they can participate as a team, giving those personas different skills, hopefully isolating those agents on their own special computer, because you don't want to give the agents too much access to your personal information or your wallets. And so MetaMask was already used by some of these agents, and we're rapidly working to make our APIs more fleshed out, so agents can actually use the visual user interface of MetaMask, but we also have a programmatic API interface, and so we're trying to make that much more capable as rapidly as possible, so that agents can speak computer language basically to their MetaMask, and we have a system that we released quite a while ago called the Delegation Framework or Delegation Toolkit or SDK, and that's a system that is going to enable agents to have more granular control, more power, either over an account in my MetaMask or their own MetaMask setups, and we can do that with what's called least authority. So we can really circumscribe very explicitly what sort of privileges the agent has over an account on MetaMask. So you can tell an agent a whole bunch of things like don't publish my private key on 4chan or something like that. But you can't guarantee that the agent is going to listen to any of your instructions, and you can't guarantee that it isn't just going to go, oops, I misread that, I'm sorry, I published your private key. So this way, it's not going to be possible for the agent to do something that would expose your private information or send some of your assets away outside of the budget that you give it.
Yeah, so, because, I mean, I find it interesting that people use the word trust when talking about agents. How do you set, trust boundaries? Yeah. And blockchains are often about trustless systems. And yeah,
trust minimized systems. Yes.
Trust minimized systems, not needing to trust the third party. And with agents, so it's really about controlling the access of information that they have.
So agents are machines. They are software that sits at a layer outside of or above a blockchain. The trust minimization happens at the core protocol, where you've got mathematics and computer science basically doing objective things, not objective determinations of what happened and when, as we have in traditional finance. And so you get the really rigorous trust at layer one. If you write your layer 2 correctly and you interface it to layer 1 correctly, you get basically the full security guarantee of layer 1 at these layer 2 blockchain networks. And so in this way, we've been able to scale the power of decentralized trust to a lot more computation environments. But then if you have some sort of program, prediction markets, or a DAO potentially, where you've got people who are participating in progressing the work of the DAO, you have subjective systems there. They're just perhaps more transparent. They can be more decentralized, but not really rigorously decentralized. And so as humans get more and more in the loop, or agents even get more and more in the loop, you can have reputation systems and things like that, but you don't have the same sort of objective trust that you have at layer 1. That's where the gold standard of trust resides.
Yeah, so we'll see where all of this develops. I see that we're running out of time, but fascinating stuff. Thank you so much for joining me, Joe, on this conversation, and thank you to our audience as well.
systems and things like that, but you don't have the same sort of objective trust that you have at layer one. That's where the gold standard of trust resides.
Yeah, so we'll see where all of this develops. I see that we're running out of time, but fascinating stuff. Thank you so much for joining me, Joe, on this conversation, and thank